Welcome to the European Market Open. A minute to go until the start of cash equity trading. I'm Francine Lacqua in London with Tom McKenzie.
And here are your top stories. Boxed in, Bloomberg reports US officials worry Vladimir Putin may escalate military operations in Ukraine. President Biden calls for Russia's removal from the G20.
Biden in Europe, day two, he heads to Poland to meet with President Duda after 2 million Ukrainian refugees have entered the country. Plus, yen risks, the currency snaps 5 days of declines against the dollar. Analysts see room for more weakness as the BOJ's Kuroda calls it in for Japan. Now, this is what the markets are doing. If you look at futures, they're actually pretty much stable. In fact, I mean, the DAX futures are gaining 0.1%. The FTSE futures down 0.2%. It's very clear, Tom, that the focus is on exactly what the Fed can do, what the, investors are trying to take stock, first of all, of some of the knowns unknowns. So what the Fed will do, whether we have 50 basis points or 25 basis points. And then the other thing that we're, of course, watching is exactly what investors want to hone in on, which is food price inflation, and which is also some of the other things that we should keep an eye on. For example, raw materials. So iron ore gaining some 3.7%, gas, a bit of pressure there, or not pressure, but at least a bit of stabilization after the crazy volatility that we've seen. The big story, of course, is over in yen. So Treasury is holding on to losses, yen snapping its 5-day losing streak. And this is all about differentials and the difference between what we're seeing for example, PBOC and some of the accommodative stance there. Also, we heard that from Governor Kuroda and how that compares with what the Fed is doing. So that's your cross asset. I don't know whether we're looking at some of the other things. Tom?
Yes, you're right to point out the BOJ, that rate differential really playing out when it comes to the yen. Of course, that demand as well, and the necessity for Japan to continue to import commodities, putting pressure on that currency. And some strategies seeing further downsides, significant further downsides for the Japanese currency. So watching any moves in the BOJ, of course, the inflationary picture is very different in Japan to the picture we're seeing in the US and Europe. We continue to watch the geopolitics, of course. President Biden visiting Poland later today. We are on the ground in Poland. We'll give you an update on that shortly. In terms of how things are breaking out there, cross-asset, futures stateside, after a solid day of earnings and gains yesterday in the US, led by NVIDIA, led by the tech sector, semiconductors, has positioned the US for a solid start, at least this morning. As we look at the futures, just gains of 0.1%, building on the picture we saw yesterday. US 10 years at 235, just up 1 basis point. So coming off the highs that we've seen in the last few days, but of course that bond sell-off as a theme, many would argue, will continue. But that is a debate within and amongst investors. Bloomberg US dollar index is currently lower by 0.2%, and Brent lower by 1.3%. And will give some relief to some parts of the equities market, currently at 117. Fran.
Yeah, Tom, so this is what the sector's looking like. If you look at the breakdown in terms of various sectors, it's been a pretty incredible week, but it was really the narrative about inflation. So chemicals, construction, materials, some of the biggest losers. It's really banks and consumer discretionary on the other side. So you can see healthcare. It would be great if we saw a 1 week, of course, snapshot of some of these sectors, because it really is the moves that reverse what we saw from the beginning of the war. So again, a lot more optimism. And Tom, I don't know how long this lasts for. There's a lot more optimism that actually the Fed and other central banks can weather whatever it's coming. And then you see really this differential between stocks and what bonds are doing.
Yeah, absolutely. And the fact that the markets seem to be looking past the headlines that we're seeing emanating out of Brussels, out of NATO, the warnings about what Russia may resort to militarily, and the markets looking through that at this point and looking through the sell-off that we're seeing in the bond markets as well. That has not bled into equities, particularly US equities have remained supportive over the last few weeks. Some individual names that we wanted to highlight for you. BP, this is part of the energy complex as well, of course. You saw Brent at 117, lower by over 1% in today's session. We're continuing to watch how things unfold and whether or not the US and the EU come to some agreement in terms of cutting off, reducing that European demand for Russian energy, oil and gas. BP currently down 0.8%. BNP Paribas, the French lender, of course, down 0.2%. And Ocado, that online grocer here in the UK, lower by 0.4%. Let's get over to Bloomberg MLive managing editor Mark Cudmore. Mark, you're looking at what the Aussie dollar Japanese yen pair tells us about the markets. You were highlighting for us in the last hour, there is volatility in these FX markets.
There absolutely is, Tom. I am very, very excited about these FX markets. Look at this. You probably can't see that number here, but I'm going to read it out for you. 52.67% as of this minute. That is the gain since the pandemic low in Aussie yen. In just 2 years, we've gained more than 50% in a G10 cross, and we're told there's no volatility in FX anymore. Well, FX markets returned in a big way, and they particularly returned to the yen. You can see this almost straight line move up in this cross recently. Almost every yen cross looks like that, and almost all of them, I should say, cross yen, are reaching multi-year highs. Yen is having the worst month in more than 5 years. And this is really interesting because supposedly yen is a haven. And of course, we've got a Russia-Ukraine war at the moment. But it's all to do with the fact that oil prices are absolutely powering higher. The rest of the world is an inflation problem. Yields are surging, particularly in the US. And yet the BOJ has yield curve control. It's pinning yields down. And that is particularly interesting today because there was an expectation that the BOJ would come in today for their yield curve control. We are seeing 10-year yields at 0.24%. Their band is meant to be 0.25%. No sign of them so far today. So will the BOJ tweak their yield curve control, or will they come in again, keep yields lower, and put more pressure on the yen to weaken further? One final point. We're approaching fiscal year end in Japan, 31st of March. Normally, the yen weakens into fiscal year end. So even though this move is extraordinary, and it's tempting to fight in the short term and think it's gone too far, it might just have a little bit further to go in the coming days.
We're looking at $121 yen as things stand. MLive managing editor Mark Cudmore on the need to continue to watch the BOJ and, of course, that pressure on the Japanese currency. Today, just getting 0.5% against the dollar. European leaders continuing that two-day summit on Ukraine after a monster diplomatic push on Thursday. Energy, sanctions, weapons and aid top the agenda at back-to-back meetings of NATO, the G7 and the EU.
The United States is committed to provide over $2 billion in military equipment to Ukraine since I became president.
The Russians are obviously going to try to get around the sanctions on their gold, and we're taking steps to try to make sure that there's no leakage.
It's hard to imagine that, such a massacre, such a slaughter can happen without our appropriate humanitarian response.
This is a war. So we have to cope with the recession. We have to react to that.
This is a price for our freedom. And it is better to pay in dollars or in euros, as the Ukrainians are doing with blood.
Okay, for more, we're joined by Bloomberg's Maria Tadeo in Brussels, Aggie Cantrell in Poland. Maria, let's start with you. The stakes were high. How much was actually accomplished at these back-to-back summits?
Well, Thomas, it often is the case you have to separate the symbolic nature of a meeting like this. It went from the early morning until the late evening here in Brussels, and there was a show of unanimity. When you look at President Biden, he said, well, Vladimir Putin was hoping to create chaos in Europe. Instead, we're more united than we've ever been, and that was echoed by the NATO Secretary General, too, who said, we're the strongest military alliance in the world. If we stick together, we're going to be safe. And it was pretty much echoed by every other major leader here in Brussels. However, when you look at the details and the specifics of this, I frankly don't see anything different. We heard from the Ukrainian president once again saying we need more weapons. If we want to sustain this fight, we need more. Please, in particular, send in the fighter jets. When it comes to the energy conversation, which, Tom, this is the big issue today, really is about energy. We don't really know much. I do have to say, however, to be fair, that President Biden and the head of the Commission, Ursula von der Leyen, are about to meet, and there is, of course, a lot of speculation that they could provide some announcement when it comes to LNG shippings into Europe from the U.S. But, of course, we're pending and waiting for those details.
Yeah, Maria, a couple of things that have changed, I think, is probably the briefing by senior U.S. officials and saying they think when Vladimir Putin is boxed in, he lashes out instead of backing down. What does that mean for cutting off supplies from Russia? And actually, can the U.S. really reassure the European Union that they can make up for that lost LNG and Russian imports if they were to go heavy on sanctions?
Well, if you look at the numbers, Francine, when you look at natural gas imports into Europe, 25% is LNG. When you look at that 25%, it's very much split between a number of countries. So the U.S. does not even have the majority stake on that. And I hear repeatedly, when it comes to energy, this is something that for Europe, you simply cannot unplug from one day to another. And in fact, remember this week, there had been a lot of speculation at the start of the week that European leaders could ban energy imports from Russia. The reality is we're on Friday. We're about to enter this meeting, and I've been repeatedly told we're not going to see a blank ban. That's not how it works. Diversify providers, yes, we want to do that, especially in the next 2 to 3 years. But the issue is this winter, when it comes to Vladimir Putin and their reaction, to me it's striking that the United States said we are concerned about particularly the use of chemical weapons on the Ukrainian population, especially because, Francine, it's been a month of this war, and the Russians have not really obtained or gotten to the objectives that they said they wanted to take. Kiev, the capital of Ukraine, is still very much in the hands of the Ukrainian government.
Yeah, that risk clearly being highlighted by policymakers, officials, certainly in Washington. Let's get to Aggie then on that point and the fact that President Biden will be meeting with his Polish counterparts in Poland today. You are there, Aggie. What can we expect to see from this visit?
Yes, so when Biden comes this afternoon, he's going to be greeted by President Duda at Rzeszów Airport. And the focus of this is going to be twofold. There is going to be the key humanitarian focus that he's going to be having a briefing about the humanitarian crisis, not only in Ukraine, but also how this is affecting places like Poland, which has accepted a huge amount of the refugees from the war in Ukraine. But also he's going to be meeting with the 82nd Airborne here, who are helping the Poles and other NATO members bolster the eastern flank of the alliance. That is also a key focus for Poland, that also sees Russia as a security threat not only to Ukraine, but also to their own people.
Both, thank you so much for joining us. Bloomberg's Aggie Cantrell and Maria Tadeo joining us on the very latest, of course, of this invasion on the ground. Now, coming up, bets are mounting that Treasury yields will rise. More on that story. We'll look at what the Fed can and can't do. That's coming up next. This is Bloomberg.
If you do any kind of business in this country, there's a pretty good chance that you're going to see that business registered in Delaware. Why? Because that's where you do it. And our point was Wyoming can be that venue for blockchain enterprise, for crypto.
It's not the Wyoming way to sit around and wait for change. We want that independence, we want that freedom, we want that individuality. And that's a common theme that brings together bipartisan support for this in Wyoming.
We want to make sure that people understand, especially in Wyoming, but as the United States as a whole, this trend is coming. It's not going to stop. This is more of a small town that's growing into what I would call the cryptocurrency version of Silicon Valley.
It's the philosophy of that rugged individualism, the independence, and the ability to really get things done for yourself and control your own destiny. You get that from a blockchain, and you don't get that without it.
Welcome back to the Open, everyone. 13 minutes into the European trading day, and we're still stable, but actually we're seeing a little bit more pressure to the downside. We opened slightly up, 0.2% higher. Now we're 0.2% lower for the European stocks 600. Now, if you look at the biggest, the biggest fallers, it's actually the banks. I don't know if fallers is the biggest losers. My gosh, thank God it's Friday, and I can get back on track with Espresso and start speaking normally again. So European stocks are actually the biggest losers, down some 0.9%. Autos also been under pressure, but we had a great story actually on the Bloomberg terminal saying how European auto stocks have rarely been so cheap. So we'll push it out also on social media. And then a little bit of chemical gaining some 0.3%. It's been quite a constructive week actually for stocks overall, as investors seem to believe that whatever happens with inflation, central banks are here to sort it. Now, there are mounting bets that treasury yields will rise, and that's driving down interest rates in short-term funding markets. Well, joining us to discuss all of this is Esti Dweck, Chief Investment Officer at Flowbank. We're also joined by our markets editor, Christina Kino. So thank you both for joining us. Christina, I find it, my mind kind of like explodes. My brain is like, wait, what's going on? Stocks are gaining on the week. They had one of the best weeks that we've seen for a long time. And yet we're talking about, President Putin not reacting well if he's put in a corner. We're looking at inflation rising, and frankly, it could unravel pretty quickly in terms of possible recession risks.
Absolutely, Francine. And I think this is why investors are really hesitant to call this a proper risk-on sort of rally, because there's so much risk underlying markets at the moment. And, some of the best explanations I've seen is potentially just a little bit of short covering after the big risk-off move that we saw at the start of March, but not necessarily a turn in sentiment. And again, I think people are still very, very cautious when you look at the intricacies of the equity rally. It's not really a broad-based rally. It's very differentiated. Yeah.
And Christine, just sticking on that, you saw yesterday, particularly within the tech sector, semiconductors, NVIDIA powering markets higher stateside. Does that spell a new leg higher for tech more broadly? Does it spell the end of kind of the growth to value shift that we've seen?
Well, Tom, I think a lot of factors going into that. I think definitely tech being one of the sectors that had been battered very, very badly this quarter. Definitely one of those candidates for that rally, leading stocks higher. But again, it's very difficult to call an end to the risks that equity investors are facing. And I think, we've had this discussion before. It's not necessarily a great year for stocks when we have or tech stocks specifically, when we have central banks really ramping up that hawkishness. So I think this might be a little bit of a relief rally here. Definitely, it's not going to go down in a straight line, but I think risks are very much still there for the sector.
Esti, you're seeing an encouraging and recent momentum that can continue for a while, but why are we seeing that optimism? Is it warranted optimism?
So I think you have two factors, and some of it depends on your investment horizon. First of all, you have seen a ramp up in hawkishness, but markets are pricing in so many rate hikes already. We've seen the 10-year in the U.S. hit 240 or just above, which seems that it can't go much, much higher, and I can't really see it going much higher than 250. And when you look at the second half of the year, I think at some point the Fed is going to have to pause. I think at some point these growth concerns are going to come back. And we're going to look at slightly more defensive sectors like tech. We're going to look at companies that have the sustainable earnings growth, that have this pricing power. And so it doesn't mean it's a straight line up from now. It doesn't mean the second quarter doesn't stay choppy, but it does suggest that there is upside for the year as a whole, and especially in the second half of the year for the tech sector.
Does it mean, Esty, then that we've seen the lows of the year for the equity markets?
I think that's one of the encouraging signs. It does seem that these February lows are holding, and that is encouraging. We're going to have to see these developments. I think in the last week or two, we've seen that markets are a little bit less sensitive to these conflict headlines. And that is historically what we've seen, a little bit less reaction as time goes by. So if we have a terrible escalation, of course, it's a bigger risk for the markets. But at the moment, I'd say I'm hoping that these lows are going to hold. And it doesn't mean, again, that we bounce back very strongly right away. There are some hurdles, but sentiment is so negative. There's so much bad news priced in already. And if these lows have been able to hold, I think that should be able to continue to be the case for the coming months.
And Christine, if you look at real rates, it's definitely telling us that, look, inflation is not really going anywhere anytime soon. Do we look, if you look at the bond markets, I mean, do we trust it more than the stocks? And is it close to the signal that it's a recession, or we'll see a recession?
Well, yeah, even there, Francine, I think there's still a lot of doubt over what the yield curve really is telling us, because as we heard from Jay Powell, right, his focus is on the short term, the 3-month, 18-month gap, rather than the long-term 2s, 10s, or 5s, 30s curves that we like to look at as well. And so those are really sending some conflicting signals here. But yeah, I think for the moment, I think the recession risk is kind of secondary to the inflation risk. That is really what a lot of Federal Reserve officials this week, speaking this week, really are trying to drive home the point that they're reacting to that. And this is why we've seen increased calls for that 50 basis point rate hike. And so the markets, I think, particularly bond markets, are going to want to see that play out, or perhaps try and call the Fed's bluff, especially heading into that May meeting. So potentially we could see more momentum higher into that meeting for yields. And then after that, yeah, it can be a little bit of a two-way sort of risk after that meeting, I would imagine.
Esty, from the central banks to the energy complex, we know discussions happening, of course, between the US and the Europeans about how to better position Europe around their vulnerability to Russian oil and gas. We're looking, and we've seen energy stocks in Europe gain about 15% year to date. I know that's a sector you've been looking at. Are we starting to see that run up, top out for energy? Is there more upside? Do you like the energy sector at this point?
We do still like the energy sector. We've seen a very nice run up in the US and Europe. We've been overweight since last year, so not conflict related. I think that even if we see a resolution, which is not our base case scenario for now, not anytime soon in any case, oil prices are still going to remain relatively high. And in that scenario, energy companies didn't benefit that much from the upswing in oil prices even before the situation unfolded as it did. So I think there is more upside. We've probably seen a big part of the move, but I don't think we're at the top yet.
How long, Christine, this is the killer question, I'm sorry, and it's on a Friday, but how long does it take for the market to work out the secondary effects of what we're seeing in raw materials?
Francine, I think it will be a crucial question for the second quarter. I think a lot of those questions will be answered in the second quarter, not just on the trajectory of commodity prices itself, but also the response of central banks and how that feeds through to the rest of markets. I think that's really when we'll get clarity on whether the Fed is indeed serious about delivering that 50 basis point rate hike imminently. We'll also probably get more developments when it comes to the Russia-Ukraine conflict and what that means for commodity prices. So I think a lot of these uncertainties potentially clearing up in this coming quarter.
Okay, Christine Aquino, thank you very much indeed. Of course, walking through the key market themes of the day this Friday. Flowbank Chief Investment Officer Esty Dweck as well on some of those insights. We appreciate you taking the time this morning. Just on nickel, Francine, we're seeing a couple of headlines crossing. Of course, this was a big story, one of the big stories of last week, the short squeeze. LME now, nickel declining close to 2% after raising some gains.
Yeah, yesterday I was quite excited because the nickel tycoon covered part of his big short position this week. And so that was big news, but I have to say, when it comes to the LME, they can't really catch a break. At some point, it was up 8.5%, and now it's erased most of their gains. Now, coming up, Biden's Europe tour continues. The U.S. president is meeting the European Commission's Ursula von der Leyen before heading to Poland. We'll get more on the geopolitics and discussions next. This is Bloomberg.
What's happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
But we need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Welcome back to the Open. We are 25 minutes into Friday's European trading day. You're seeing losses across the benchmark European Stock 600, 0.2%. In terms of your sectors, biggest loser, banks down 0.7%, followed by energy, personal care. Four sectors in the green as things stand. Basic resources, food and beverage, chemicals, and real estate. But broadly, the picture is lower. Building on the declines that we had yesterday for Europe, US posted a decent session towards the end of the day, Wall Street, but futures on the S&P mini futures pointing to a drop of 0.2%, and NASDAQ futures pointing to losses of 0.4%. Let's get the Bloomberg Business Flash now with Laura Wright.
Thanks, Tom. Food delivery startup Instacart was a pandemic darling that's now facing decelerating growth. The company is slashing its valuation by almost 40% to around $24 billion. The company says it's a move that will help it attract talent by making stock awards more enticing. Bloomberg's learned that Apple is working on a subscription service for the iPhone and other hardware products. That's a move that could make owning devices similar to paying a monthly app fee. Using hardware subscriptions would be a major strategy shift for a company that has generally sold devices at full price outright. That's the Bloomberg Business Flash. Tom.
Laura, thank you. Okay, I'm going to leave the show now. I'm going to prepare for the next hour, Surveillance Early Edition stateside. So I'm leaving it in your very capable hands, Francine, on this Friday as we look ahead to the weekend and another remarkable week, certainly when it comes to geopolitics.
Yeah, I'm looking forward to catching the next hour. All focus on Joe Biden in Europe, his European tour. It's like the bus tour, the mystery bus tour, but actually talking about diplomacy and really important things. He's meeting the European Commission's Ursula von der Leyen before heading to Poland. We get more on the geopolitics and on the discussions next. This is Bloomberg.
that it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccine specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines, and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number, and most of the time when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
In crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Welcome back to the Open, everyone. 30 minutes into the European trading day, and here are your top stories. Boxed in, Bloomberg reports U.S. officials worry Vladimir Putin may escalate military operations in Ukraine. President Biden calls for Russia's removal from the G20. Biden in Europe, day 2. He heads to Poland to meet with President Duda after 2 million Ukrainian refugees have entered the country. Plus, yen risks the currency, snaps 5 days of declines against the dollar. Analysts see room for more weakness as the BOJ's Kuroda calls it a plus for Japan. So let's also look at the sectors that are on the move. A lot of the pressure, of course, is happening in the Treasury market. The focus firmly on what inflation means for some of the sectors. Now, we're also getting a breaking news headline. The U.S. is aiming to supply the EU with at least 15 BCM of gas. Germany plans to be almost independent from Russia mid-2024. Now, that's about 2 years away, so it begs the question, what happens in the meantime if those exports from Russia were to be cut off? Now, European leaders are continuing a 2-day summit on Ukraine after a monster diplomatic push on Thursday. Energy, sanctions, weapons, and aid top the agenda at back-to-back meetings of NATO, the G7, and the EU.
The United States is committed to provide over $2 billion in military equipment to Ukraine since I became president.
The Russians are obviously going to try to get around the sanctions on their gold, and we're taking steps to try to make sure that there's no leakage.
It's hard to imagine that such a massacre, such a slaughter can happen without our appropriate humanitarian response.
This is a war. So we have to cope with the recession. We have to react to that.
This is a price for our freedom. And it is better to pay in dollars or in euros, as the Ukrainians are doing with blood.
We're just getting some breaking news on energy. The U.S. and the EU have reached an energy supply deal to cut dependence on Russia. The U.S. is actually aiming to supply the EU with at least 15 BCM of extra LNG in 2022. Again, that could be sufficient for the summer months. I don't know what happens when we get onto the winter and those colder temperatures. And Germany says that it plans also to be almost independent from Russian gas mid-2024. That's 2 years away. And again, it begs the question of what happens in the meantime. So for more on the second day of summits, we're joined by Bloomberg's Maria Tadeo in Brussels. Maria, we seem to have an agreement, still thin on details, so we need to know exactly how much it entails. But in the shorter term, is there, I don't know, if you look at shorter, medium, and longer term, it seems that the problem is not short because we have the extra supplies, but it could be next winter.
Yeah, and Francine, you know, there's two stories here. What do you do about the winter coming up, particularly when it comes to the storage? And what do you do with the broader energy strategy 2-3 years down the line, considering at this point there isn't a single European energy market? As you know very well, Francine, from your own experience, the 27 different countries that form the EU have very different systems. Now, what we do have now from this deal that has been announced by Ursula von der Leyen and the President of the United States is that the U.S. will provide 15 billion cubic meters of energy this year, what the European Commission says, and of course, these numbers are breaking, so we have to check ourselves, but what they say is that this will ultimately replace the LNG supply that comes from Russia this year. It doesn't mean the full energy import that comes from Russia, but the LNG should be covered with this additional commitment from the United States. The Commission then goes on to say that they want to build and create a stable demand for U.S. LNG until at least 2030, and they're aiming for at least 50 BCM per year. So the numbers overall here look much bigger than we were expecting. What the Commission says is that when it comes to LNG, and this is just a small fraction, however, is that this year they could do in theory without Russia.
Maria, what does it mean longer term? Can the U.S. go even further if there's some kind of shock in Europe?
They say they can, and they're willing to help Europe, and we have seen the U.S. pretty much all over the world trying or scrambling to get potential suppliers to work with the European Union. When you look at the German government in particular, we are seeing that they're getting very creative about places where they could potentially tap into. But again, you know, Francine, let's make, this is not a secret, Russia continues to be a huge provider of gas and oil and, of course, coal into the European Union. And for that same reason, the European Union says switching completely from one day to another is very difficult, and the reality is this year we're probably still going to have to work with Russia to some extent. The big issue more than that is how do you make those payments, especially after Vladimir Putin suggested he wants to take rubles, and potentially if he doesn't get paid in rubles, what's going to happen after that? That's a real question here in Europe. Are we looking at potential unilateral moves from Gazprom to cut temporarily some supplies to increase the pressure in Europe?
Maria, thanks so much. Maria Tadeo, they're joining us from, of course, the Council building in Brussels. Now we're joined by Sean Raitata, the senior European economist at Vanguard. Thank you so much for joining us. I mean, so many questions on, first of all, if these gas prices continue going up, if we see a lot more disruption or even the cutoff of exports, is it a given that we go into recession?
Yeah, thanks, Francine. I mean, clearly the events of the last month or so have been tragic, but also have injected a lot of volatility into markets, a lot of uncertainty as well. And the main transmission, as you say, is through the commodity markets, oil prices, gas prices, etc., but also through confidence as well. And we're seeing that in the last few days or the past couple of weeks, where you're getting big depressed falls in consumer confidence surveys. So I think for a recession to take place, you need oil prices to be at $150 plus and to stay there for an extended period of time, but also now confidence to be depressed and to stay there as well for an extended period of time to really get those impacts from recession.
So how long does it take to actually understand exactly the second and third round effects of what we're seeing in terms of higher inflation? Could we have a big surprise and a big shock making that inflation number even worse in the second quarter? Yeah, absolutely. I mean, I think the key issue in terms of second round effects is how this affects the consumer and affects real purchasing power here. If you take the example of the UK at the moment, I mean, the combination of higher petrol prices, higher utility prices, higher taxes as well, and also higher food prices, means that real disposable incomes are going to be probably 2% lower, give or take, this year. And that's kind of consistent with severe recessions. And if you continue to get higher inflation, and that eats away at the real purchasing power of the consumer, that's when you get a softer consumer and then potentially activity softening as well. So what does it mean for the ECB outlook?
Yeah, I mean, the ECB are clearly in a tough position. I mean, I'll say they're slightly different to the Fed because, of course, the crisis in Ukraine is a bit closer to home there.
Very much closer to home.
I mean, absolutely. But also, the labor market's a bit different there as well. I mean, we have seen some progress in the last couple of years, but in terms of wages, we haven't seen that accelerate in the same way we have in the US or the Eurozone as well. And so that's why the growth implications seem to carry a bit more heavier weight than inflation in the Eurozone. But at the same time, inflation expectations are rising, right?
Yeah.
You've got the five-year swap at 2%.
Yeah, so what does it mean concretely? I mean, I guess the problem compared to other shocks is that we had scenarios that, if not range-bound, even with COVID, it was either worst-case scenario, best-case scenario. Here, because you add, the uncertainty of what Vladimir Putin does next, it's really like 3-4 main scenarios. How does the central bank navigate that?
I mean, I think for the ECB, what they have done and what they'll continue to do is to create optionality and to have additional flexibility, right? And they've already done that. I mean, that's going to stop QE in the middle of the year, and that then allows them to raise interest rates if they need to in the second half of the year. They also have made the wording a bit more ambiguous about the timing of the interest rate rise once QE stops. And the implication for that is, okay, we can then move quicker or move faster. I think that makes sense given the uncertainty involved in the current environment.
What does the Fed, I don't know what you're expecting financial conditions to do, of course, helping out the Fed, and how that translates for the ECB and the European economy?
Yeah, absolutely. I mean, these markets are clearly highly correlated. And if the Fed is moving and, there's, speculation about a 50 basis point increase at the next meeting, then that will have an impact not only on financial conditions, but also through the bond market, but also through currencies as well. But in a kind of paradoxical way, that'll help the Eurozone, right? Because it means there's going to be a weaker euro.
Yeah, are you expecting 50 basis points hike? And again, Charles Evans was saying he's not opposed to it, but then it's difficult how you communicate it to the markets and what comes after a 50 basis point hike.
Yeah, that's right. I mean, it's hard to really have an edge on what the central bank's going to do meeting to meeting. But from our perspective, at the beginning of this year, even, we were saying the Fed funds rate could reach 3% plus. And that was maybe an out of consensus call at the beginning of the year. It's now becoming more and more consensus. And the reason I think is twofold. I mean, one, you need to have a restrictive policy stance above estimates of neutral, and there's obviously ambiguity about where neutral is. But also the second point, you need real rates to be positive. And the Fed funds rate just isn't in positive real territory at the moment.
All right, thank you so much for joining us. Sean Ratata there, Senior European Economist at Vanguard. Now, we're also looking at live pictures from Brussels. Of course, it's another big day of summits. President Biden and the EU Commission President Ursula von der Leyen expected to give a press conference shortly after the US-EU war cooperation meeting. Now, in the last couple of minutes, we had news that the US and the EU were reaching energy supply deals to cut the dependence on Russia. It will be very interesting to see the timeline of that, because for the moment, Germany said it plans to be almost independent of Russian gas mid-2024. That's 2 years away, so what happens in the meantime? Still to come, from Chelsea to Dubai's swankiest neighborhoods, oligarch Roman Abramovich is among the Russian tycoons scouting out Emirati property. So we'll have a lot more on that story next. This is Bloomberg.
Is this going to primarily be chips for your own business, or is this going to be more centered around the foundry business and external customers?
It's going to be both. And what we said today is we're announcing 2 fab modules. It's a large location, 1,000 acres, because I'd hope to build out a full 8 fabs or more on this location. And, if we do that full project, it would be $100 billion over the course of the decade or so. So a massive project, initially 3,000 jobs, 7,000 construction workers, supply chain, et cetera. I mean, this is just fabulous. And the products will be our most leading edge chips. So as we said, this will be the angstrom era when we're going to 2 nanometers and below into the angstrom era. So it'll be the most advanced chips, potentially the largest manufacturing location in the world. We'll use its output for our internal products, but also for those of the foundry customers as well. So it's going to cover both.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the House for business's greatest minds.
Welcome back to the Open, everyone. We are 43 minutes into the European trading day, and you can see we're still seeing stabilization. The DAX actually gaining 0.1%, the CAC 40 pretty much flat, the FTSE down 0.2%. This, of course, is possibly linked to energy, and then the European stocks flat. Now, what happens for the rest of the day, frankly, no one knows, but investors are evaluating the economic risks from the war in Ukraine, higher inflation, and how the central bank and the Fed respond to that. So if a monetary policy tightening will be enough to do the job, not hurting growth too much, but really handling that inflation print. So we're also looking at live pictures from Brussels, where President Biden and EU Commission President Ursula von der Leyen are expected to give a press conference after their US-EU war cooperation meeting. The couple of headlines actually coming on various different fronts. So Russia's NSD said the clearing system blocked its account. So I don't know whether that relates to payment of gas or oil. We'll get to that in a second. The NSD, just a reminder for our international viewers, is the Russian depository system. So I think it's the mechanism by which you actually send and receive some of the money. So it said, the Russian depository system saying that Clearstream has blocked its account. That, of course, has huge implications for energy and how some of the things are played through that, I believe. Also, the US and the EU, minutes ago, saying they reached an energy supply deal to cut dependence on Russia. So EU leaders say that Moscow should also honor payments for energy exports in the currency stated in contracts, usually dollars or euros. That's after Vladimir Putin announced plans to force buyers from what he described as unfriendly nations to make payments for gas in rubles. Well, the Italian Prime Minister Mario Draghi said the demand won't be accepted.
We consider it a violation of existing contracts. This is a war. So we have to cope with the recession. We have to react to that. We have to mitigate the unavoidable. I wouldn't call it recession. I don't think we have a recession. I think we're having a slowing down of the economy.
We're joined now by our Europe energy editor, Isis Almeida. Isis, I have 1,000,001 questions because, frankly, we have leaders saying, we need to honor the contract. I mean, this is not the point. The point is they either want to cut off the supplies or they're ready to pay in ruble, which could be actually also circumventing sanctions. So is there an appetite, and can the EU live without Russian oil and gas?
Well, I think that you have lots of questions. Some of these questions the investors out there have, the utilities out there have. It's not very clear how this would work. You know, Putin gave a week for the central bank to come up with a mechanism, so we still don't know how it would happen. What we know is that that's a breach of contract. The majority of the long-term contracts that European utilities have with Russia is basically stipulates payments in euro, and we would have to have a round of renegotiations to be able to pay in rubles. Now, a lot of countries have already said they don't want to pay in rubles. Some companies said they haven't been notified. So at this point, it's very unclear. But can we live without Russian gas? I think until the end of this winter, I think we would be able to cope. Our storage facilities are in a much better situation than we were before. But can Europe live without Russian gas altogether? I think that's going to be very tough.
Yeah, is there anything that the U.S. can do at this point to reassure them? So there's this, headline that crossed, and we're expecting that headline to really lay out, I guess, the framework and also the timeline. The U.S. and the EU have reached an energy supply deal to cut dependence on Russia. We also had Germany saying, look, they will be independent more or less by 2024. 2024, ISIS, is 2 years away. Like, what do we do in the meantime?
Well, I think that, first of all, can the U.S. help? Yes, the U.S. can help, but can the U.S. help immediately? That's another matter, right? Because actually the U.S. is already exporting at maximum capacity. There are some plans for a few terminals to come online, but it's not a huge bump at all. It's about 15 BCM, a year. And I think that some of this could come to Europe. I think it's already contracted, if I'm not mistaken, by some of the European companies. But building an LNG terminal, an export facility, it takes time. And it also requires the European companies to sign contracts, long-term contracts of 10, 15, and sometimes even 20 years, which a lot of companies here don't want to do because, as we all know, by 2050, we need to be net zero. So how can we do that? I think we have a situation where we have plans to wean ourselves off Russian gas colliding a little bit with our climate policy.
Isis, one of the also most tortuous exercises to try and explain, especially to foreigners, the European energy plan, or how we set prices, which is very linked to gases. So I know if there's one woman for the job, it's you that can explain it in clear terms. I mean, there's a push from certain European countries to try and change it so that it takes a bit off, pressure from households. Will we have a new plan on how we set these prices at a European level?
I mean, the markets are very free in Europe. I think one of the changes that we've seen over the last couple of years is that the price of electricity used to be set by the price of coal. And as we phased out coal and, gas became what we call baseload, it became the unit that's providing most of our electricity during the day. Really, it is the gas price that sets the electricity price. So I think that's what some countries are scared of at the moment, is that if we have gas crunches like we have now, or if we have supply disruptions from Russia, it will immediately filter down to electricity prices too. So there's lots of discussions on how to decouple gas from power, and I think Portugal and Spain are leading that proposal.
Isis, thank you so much. As always, Isis Almeida there, who heads all of our energy crisis here in Europe. We'll continue watching Brussels, where we're expecting some news out of President Biden and President also von der Leyen. Now, property brokers in Dubai's swankiest neighborhoods are saying inquiries from Russians are skyrocketing. Among them is Chelsea Football Club owner Roman Abramovich, who's said to have shown interest in the real estate market in the UAE. Now, the Gulf country has taken a neutral stance over Russia's invasion of Ukraine. Let's bring in Tom Metcalf, who leads our finance coverage in London. So first of all, Tom, always great to speak to you. So thank you so much for coming on. What do we know, Roman Abramovich is after? So I guess Dubai is considered a safe place if you're a Russian oligarch. Does he have the money to spend? Where is this money? Is it frozen? How does he get it out of Russia?
Yeah, well, the choice of Dubai makes a lot of sense. It's sort of still a financial centre, global financial centre, but still open to Russians, whereas somewhere like London, where he's obviously made his base in previous years, is now closed. As to how he actually pays for this, well, it's clearly not from any UK or EU assets. He's not actually sanctioned yet in the US, but I suspect all the banks there will be very closely looking at those flows. So, as a billionaire, he's probably got accounts all around the world, and I'm sure one of them would be funding this.
Would it come from, and I know these are, I guess, very difficult questions to answer, but if he had a big account in Russia, would it be possible, given also the capital controls, to take it out and bring it to Dubai?
Yeah, so that's one of the interesting things we heard, is that some US Treasury officials are getting increasingly concerned that might be the way the money might be enrouted is through actually China's offshore clearing system, SIPs. So they're thinking Moscow via SIPs and then comes through offshore into Dubai. So that's a possible route.
Tom, I don't know if you follow Russian depository systems.
Vaguely.
But so we had this headline, the NSD, which is basically the Russian depository system, saying that Clearstream has blocked its account. How difficult, this, I guess, is used to pay a lot of things, right? It's corporate, it could be, for example, coupons on debt, things like that?
Yeah, it just shows it's basically, a vital element of the financial system. So if that's sort of blocked as a route, it makes it even more difficult. So again, you have to have these workarounds, whereas previously, it'd be a fairly simple system. And we've been seeing that over the weeks. Basically, a lot of Western financial institutions just do not want to deal with, Russian institutions, whether they're sanctioned or not. And it looks like another sort of blow against how the Russian financial system used to work.
Tom, thank you so much for the insight, because that was, breaking news just a couple of minutes ago. The NSD, the Russian depository system, saying that Clearstream has blocked its account. Now, we'll keep, of course, a very close eye on what's happening in Brussels. Live pictures there where President Biden and EU Commission President Ursula von der Leyen expected to give a press conference after US-EU war cooperation meeting. We'll have plenty more with our Maria Tadeo up next. We're seeing movement in the room. I think the reporters are just coming in, so maybe we're a couple of minutes away from the start of the press conference. This is Bloomberg.
Airport, and behind me you can see SpiceJet 737 MAX aircraft. Earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. There's a big celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Welcome back to the Open, everyone. 54 minutes into European trading day. Again, pretty much flat for the European stock 600. We haven't seen that much movement since stocks opened. They're slipping a little bit more maybe than they were about 15 minutes ago. U.S. futures also slipping a little bit, dragged lower by energy and banks. It's all about the Federal Reserve monetary policy tightening and whether investors think that it can, keep a lid on this inflation. Now, we're also looking at live pictures from Brussels, where President Biden and EU Commission President Ursula von der Leyen are expected to give a press conference shortly. We're waiting on them after their U.S.-EU war cooperation meeting. We're joined on the ground by Maria Tadeo, who's been covering this from the very beginning. Maria, can the U.S. give the EU enough assurances that they would feel comfortable to cut off supplies from Russia?
Well, Francine, overall, when you look at the deal that has been announced just minutes ago by the European Union and the United States, they talk specifically about LNG. Of course, when you look at the bigger imports that come from Russia, well, this is not just about LNG. We talk about natural gas, we talk about oil. And of course, is this going to change things significantly and dramatically for the European Union overall? Well, the answer is probably no, but there's some interesting numbers here that point to a real declaration of intentions from these two to work together, and that is the United States saying we are going to work with our international partners to provide further LNG volumes for the European market. They talk about 15 billion cubic meters until 2022, so this year, to neutralize imports from Russia, and after that they say they are going to increase that potentially to 50 until 2030. So this is a relationship that's building in time.
Yeah, Maria, thanks so much. Maria Tadeo there will be bringing us the very latest from that press conference. I think a couple of microphone checks. That's a white balance. This is the things, when you work in TV, it means then a couple of minutes we're expecting that press conference to start. That's to make sure that the color is actually matching everyone else in the room as well. European market open, that's it.
First step in building a connectome is to get your hands on some brains and then cut them up. It all sounds very grim, but Harvard turns out to be quite efficient with its brain harvesting. Jeff's lab can do a year's worth of research with a single mouse brain. Small chunks of the brain are fed into the slicer, where a diamond blade carves off a thin sliver of tissue. The tissue floats along some liquid and onto a piece of tape. The brain slices are then put into this very large machine, where they're photographed in the finest of detail. Software helps stitch the pictures back together into a single 3D image, and algorithms are applied to help make sense of what's going on inside of the brain.
We're looking at what we can do to help, but I've got to tell you, logistically at the moment, it looks very difficult, but both with armor and with jets.
The United States is committed to provide over $2 billion in military equipment to Ukraine.
The security environment in Europe is now changed and will stay changed, given what Mr. Putin has proven.
This is a price for our freedom. And it is better to pay in dollars or in euros, as the Ukrainians are doing with blood.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kaylee Lines.
It is 9 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong on this Friday, March the 25th. Our top stories today. The US has struck a deal aimed at helping the European Union replace Russian gas imports. That will pave the way for the bloc to receive more American liquefied natural gas. US officials are worried that Russian President Vladimir Putin may lash out dangerously. Russian troops are bogged down in Ukraine, and some say Putin's tendency when boxed in is to escalate. Meanwhile, President Biden wants Russia booted out of the G20. And EU officials suspect China may try to soften the impact of sanctions imposed on Russia. They say Beijing may be ready to supply semiconductors and other tech hardware to Moscow. And we are going to bring you live pictures now from Brussels, where President Joe Biden and EU Commission President Ursula von der Leyen are set to brief the press after meeting to discuss energy supplies. As we mentioned in the headlines, the EU and the US have agreed this deal on energy supplies of LNG from the US to Europe to reduce that European dependency on Russian gas, 15 BCM over the year, and Germany saying it hopes within the mid-2024 period to be essentially weaned off Russian oil and gas. We're going to bring you those remarks, of course, as soon as we get them. You can see the podium there waiting for the President of the United States and the President of course, the European Commission for those comments on the back of that deal. Welcome to Bloomberg Surveillance Early Edition. I am Tom McKenzie in London. Matt Miller, Kaylee Lines in New York. Anna Edwards is off. Kaylee, let's start then with a market reaction. Relatively benign here in Europe, despite all the geopolitics. A different picture in Asia, though.
Yeah, those headlines crossing a little bit too late for the Asian session, Tom. And by and large, it was a down day in Asia overnight. The big drags were China and Hong Kong, specifically tech stocks. The Hang Seng Tech Index falling about 5 percentage points. And that is after U.S. regulators yesterday said it's premature to say a deal has been reached on Chinese companies listed here in the U.S., their future, considering all the uncertainty around auditing. So still the potential that some of those may get delisted, that dragging on tech stocks. I also wanted to point to one stock in particular, and that That is Rusal, of course, the Russian aluminum company that is listed in Hong Kong. Bloomberg reporting overnight that some traders within China have reached a deal to send 30,000 tons of alumina to Siberia for Rusal's use. Really interesting to see if that indeed works given the sanctions environment. But that stock still down 6% overnight, but that's following a 14% rally yesterday as stocks reopened in Moscow. In other asset classes, of course, we saw a big selling pressure in U.S. Treasuries yesterday, and that followed through in the Australian bond market. The two-year yield up about 7.5 basis points to 158. That is the highest going back to March of 2019. And finally, have to point out the Japanese yen because it is actually stronger against the dollar today for the first day in 5. The big outperformer in Asia, stronger by about 0.7%. Still, though, at 121.49, the yen is right around its weakest level since 2015, Matt.
All right, very interesting to watch the yen, especially after Kuroda's comments that it's not the most important factor in inflation. Take a look at what's going on in the U.S. here. S&P futures, it's a Friday. We're down 0.2%, but we were up 1.4% yesterday, making up more than we had lost the previous day. In fact, we're only down on the S&P 5% year to date now. So this recovery is real in stocks. You can see investors are buying the 10-year bond, pushing the yield down just a little bit, still to 234.30. So still at the highest level that we've seen since May of 2019. NYMEX crude coming off 2.6%, just under 110 a barrel for Texas Intermediate. And Bitcoin, not doing a lot, but holding at 43, almost 44,000. So Bitcoin has been really stable, moving only to the upside gradually over the past few. It's very interesting to watch. Tom, what do you see in Europe?
Yeah, and Matt, we've got a divergence in terms of the European performance this week versus the US. The European markets have underperformed. It's a mixed picture today. The DAX is posting gains currently a little over 1/10%. You're seeing negativity on the FTSE 100 here in the UK, down 0.2%. Gains in Italy, Spain. The CAC current is essentially flat. A bit of a defensive tilt towards utilities and real estate on a sector basis, but it's banks and energy that is selling off. We're also getting a line crossing around German IFO sentiment. That gauge missing for the month of March. It's underscoring the fragility of the recovery that you're seeing, of course, in Europe's largest economy. When it comes to the rest of the asset class here, before we move on to Russia, broadly then, range bound, as I said, for the European stock 600. The German Bund is bid by about 3 basis points lower on the yield there. Euro is also bid up 0.1%. Brent lower by 2.5%. A lot of that will be down to this European-US deal. And Kaylee, you've got more on that.
Well, yeah, of course, we continue to monitor Brussels. We are seeing live pictures from there. President Joe Biden is speaking now. Let's listen in.
Use the profits to drive his war machine. And that's why earlier this month I announced the United States would ban all imports of Russian energy to make it clear that the American people would not be part of subsidizing Putin's brutal, unjustified war against the people of Ukraine. At the time, I noted that we were able to take these steps when others could not because the United States is a net exporter of energy with a strong domestic industry. And the United States welcomed the European Union's powerful statement earlier this month, committing to rapidly reduce its dependence on Russian gas. Today, we've agreed on a joint game plan toward that goal, while accelerating our progress toward a secure, clean energy future. This initiative focuses on 2 core issues. 1, helping Europe reduce its dependency on Russian gas as quickly as possible. Secondly, reducing Europe's demand for gas overall. To address the first point, the United States, together with our international partners, we're going to work to ensure an additional 15 billion cubic meters of liquefied natural gas, LNG, for Europe this year. And as the EU works to discontinue it buying Russian gas well before 2030, it will also work to ensure additional EU market demand for 50 billion cubic meters of LNG from the United States annually by 2030. To accomplish this, the European Commission is going to work with the member states to store gas across the continent, to build more infrastructure to receive LNG, and to take steps to increase the efficiency of gas. This build-out will occur in a way that is consistent with, not in conflict with, the net zero climate goal that we're shooting for. It's going to take some time to adjust gas supply chains and infrastructure that is built the last decade, for the last decade. So we're going to have to make sure that families in Europe can get through this winter and the next while we're building an infrastructure for a diversified, resilient, and clean energy future. At the same time, this crisis also presents an opportunity. It's a catalyst that will drive the investments we need to double down on our clean energy goals and accelerate progress toward our net zero emissions future. That's what the second part of this initiative is all about. The United States and the European Union are going to work together to take concrete measures to reduce dependence on natural gas, period, and to maximize the availability and use of renewable energy. We're going to accelerate widespread adoption of energy-efficient technologies and equipment like smart thermostats, work to electrify heating systems all across Europe. We're going to invest in innovative solutions and technologies to make the switch from fossil fuels. And together, we'll advance the use of clean and renewable hydrogen to reduce our carbon emissions. These steps will increase energy security, economic security, and national security. And we're going to stand up a joint task force to implement these changes and drive progress that will be co-chaired by representatives from the White House and the President of the European Union's team, the Commission's team. Madam President, I know that eliminating Russian gas will have costs for Europe, but it's not only the right thing to do from a moral standpoint, it's going to put us on a much stronger strategic footing. And I'm proud to announce that we've also reached another major breakthrough in transatlantic data flows. Privacy and security are key elements of my digital agenda. And today, we've agreed to unprecedented protections for data privacy and security for our citizens. This new arrangement will enhance the Privacy Shield framework, promote growth and innovation in Europe and the United States, and help companies, both small and large, compete in the digital economy. Just as we did when we resolved the Boeing Airbus dispute and lifted the steel and aluminum tariffs, the United States and the EU are finding creative new approaches to knit our economies and our people closer together, grounded on shared values. This framework underscores our shared commitment to privacy, to data protection, and to the rule of law. And it's going to allow the European Commission to once again authorize transatlantic data flows that help facilitate $7.1 trillion in economic relationships with the EU. So thank you again, Madam President, for your personal friendship, for your partnership, and above all, your leadership. All of this is bringing the European Union and the United States even closer together, and that's a win for all of us. So I thank you all, and I'm now going to yield the podium to the President. Let me pull this out. Where my salary here? Is it out enough? There you go. Thank you.
Thank you. Mr. President, dear Joe, your presence here in Brussels this week at the NATO summit, at the G7 and at our European Council sends a very powerful message to the world. The transatlantic partnership stands stronger and more united than ever. And we are determined to stand up against Russia's brutal war. This war will be a strategic failure for Putin. Our cooperation on the 4 successive waves of sanctions against Russia has been extraordinary and exceptional. The sanctions are now working their way deep into the Russian system, draining Putin's resources to finance this atrocious war. Our work on sanctions also shows that when we act together, we're stronger and we really can make a difference. And we are continuing to reinforce our cooperation in many strategic ways: on humanitarian and security assistance to Ukraine, on energy, on fighting the threats against our democracies, on solving outstanding issues in the EU-US cooperation, including in data protection and privacy. In a world faced with disorder, our transatlantic unity upholds fundamental values and rules that our citizens believe in. Let me focus first on refugees. Until now, around 3.5 million people have left Ukraine, half of them children. Every second refugee is a child. And the numbers will keep rising. So together, we are mobilizing massive resources to support those displaced by the conflict, be it in Ukraine or in the neighboring countries. Just this week, for example, I announced that the European Union will...
All right, there is Ursula von der Leyen, European Commission President, speaking with Joe Biden, President of the United States, talking about reducing their dependence on Russian gas. The EU has made a deal with the U.S. to buy more American LNG. It's a process that's going to take a long time, and as the president said, it may seem counter to our climate goals. He tried to make the point that you need to use energy to get to a zero carbon level. Let's get the latest with our reporters from Brussels and Poland. We begin with Maria Tadeo, our European correspondent. Maria, what did you think there of Biden's announcement, of von der Leyen's announcement, and this, it seems like a milestone, but it's going to take a long time, and even if we delivered all the LNG we have, they just don't have the terminals to accept it.
Yes, and you know, Matt, when you look at this and you look at the numbers, of course, they talk about 15 BCM this year. They argue this will neutralize just, of course, the LNG that's coming from Russia. The bigger issue is the gas through pipeline. As you mentioned, a lot of the infrastructure in Europe is actually designed to take in through pipelines. So again, you're very right to point out that this is going to be a challenge over perhaps the next 2 to 3 years. But to me, it was striking two things. The President of the United States said, with this deal here, we make a strategic decision to get closer. And that can only be a win-win for the European Union and the United States. He also said, I acknowledge, and it is clear that unplugging for Russia will cost money in the short term. And the reality is, Matt, we're already seeing that reflected in bills across Europe. And this creates a lot of social tension on the ground for many governments here in Europe. But he did say over the long term, this is a strategic choice that will make us stronger. Now, of course, the question is, how is Russia going to respond to this? The other thing that really caught my eye from this is, of course, the European Union saying and making it clear we are going to work to have sustained demand and create a market for American LNG until 2030. They also put a number on it, 50 BCM. Well, and, of course, that line from Ursula von der Leyen, Vladimir Putin has made a strategic mistake by going into Ukraine.
I wonder, you know, as we were talking yesterday about the fact that Russia's demanding payments in rubles, the EU has doubled down on the fact that they're not willing to do that for the gas that they need to survive. If Russia cuts off the gas supply now, which is a realistic threat, what does Europe do to fill that void?
Look, I asked that question to pretty much everyone yesterday. In fact, I put it to the Italian Prime Minister, Mario Draghi, too repeatedly. I asked him in English and I asked him in Italian, so there was no loss in translation here. And he said, what I can tell you is that this would be breach of contract, that there is no appetite to renegotiate anything and pay in rubles. In fact, he also said, why should we pay in rubles? At this point, we don't even know how stable this currency is. And he said, for the time being, we're not moving. Then, of course, the other thing is, will Russia cut the flows? That is something that Europeans don't want to speculate on. They say, and they're aware it is a possibility, but they always say, if he does this, it's going to hurt us both. It will hurt the European Union, but it will also hurt Gazprom, which is a money-making machine for Russia. So this is a choice that Vladimir Putin will have to make.
All right, Maria Tadeo, our European correspondent in Brussels, thank you so much for the European perspective. Let's get the American perspective now. Anne-Marie Horton, our Washington correspondent, is joining us from Warsaw in Poland, where President Biden is traveling to today. Anne-Marie, just walk us through the Biden administration's thinking on this, because as the president alluded to and Matt was speaking about, in many ways this runs counter to the president's own climate agenda.
Yes, of course. We're just not far along in the transition for Russia to just to Europe to just shut off natural gas in general, or the world. And the president understands that. But we should note this is just a task force at this moment, and these are plans. And 15 BCM out of 155 BCM is just under 10% of what Russia or the Europe imports from Russia throughout the entire year of last year. So this is very tiny, but it could potentially import as much as Russia does in terms of LNG, what's not going out of the pipelines. But the administration has been working on this for weeks, not just about potentially shoring up LNG supplies out of the United States, but going to other producers around the world. And we've seen European officials do that as well, including the German economy minister last weekend going to Doha. So they clearly are looking for other ways to get LNG as they realize that at some point, potentially, they're going to have to loosen that dependence incredibly.
Anne-Marie, what a line crossing from the Russian Foreign Minister, Mr. Lavrov, just in the last few seconds, saying that the West wants to destroy Russia's economy and Russia itself. A line there from the Foreign Minister of Russia, which brings me on to a question about how real these concerns are in Washington about the erratic behavior, the potential erratic behavior of Vladimir Putin, and the possibility that maybe he resorts to biological, chemical, even so-called strategic nukes as he is backed into this corner. How real are those concerns?
Well, they're clearly real, given the fact that the G7 put this in a statement, meaning they warned President Putin on using chemical, biological, nuclear weapons, weapons of mass destruction. The issue is right now when you talk to leaders and you talk about, quote, severe consequences you are going to put on Russia. What are those severe consequences? Were they able to get to some sort of agreement yesterday? The Latvian president said to me, they know what those consequences are. They're just not publicizing them just yet. And the issue is, though, at the moment, is that the United States doesn't see a need to, at the moment, in terms of the nuclear posture, make an adjustment. And Press Secretary John Kirby made that very clear to me yesterday. But of course, they are concerned about this. It's something they monitor every day.
Anne-Marie, thanks very much. Anne-Marie Horder, and she is our Washington correspondent, currently on the ground in Warsaw. Let's get more now on President Biden's Poland visit and the humanitarian crisis that we heard Ursula von der Leyen talk about just briefly. Bloomberg's Aggie Cantrell joins us now from Poland. Agatha?
So, yes, we're expecting President Biden to arrive in Rzeszów, where I am now, around about 2 p.m. local time. We're expecting this visit to Rzeszów before he goes to Warsaw to be twofold. He's going to be focusing on getting a humanitarian briefing, hearing about the situation in Ukraine and the people crossing the border into Poland. Remember, Poland has taken over 2 million of the refugees that have crossed the border into the EU. And as well, he's going to be talking to the 82nd Airborne on the security aspect of this. Poland itself is seeing a bolstered NATO force in order to not only aid Ukraine, but also to bolster that eastern flank, as Poland shares this large land border with Ukraine. And so both these aspects of the talks that he's going to have today in Rzeszów are going to be key to what Poland is looking for from the US and from their NATO allies.
Okay, Bloomberg's Aggie Cantrell on the ground in Rzeszów, Poland, ahead of that visit by President Biden, of course, where he'll be meeting with his Polish counterparts. Coming up, Mark Covelli, UBS Global Wealth Management CIO, and Anika Gupta, Wisdom Tree Equity and Commodity Strategist. How are you positioning amidst all of this geopolitical angst and uncertainty? Plus, Russian businessmen. Well, they're house hunting in Dubai, and Chelsea owner, at least he's the owner for now, Roman Abramovich, is among them. Read more from today's Big Take by typing NI Big Take into your Bloomberg terminal. Plenty more ahead. This is Bloomberg.
This chip shortage is going to last longer than many people believe, likely straight through this year. And I wonder what that means for prices. Will this get worse before it gets better?
I don't know that it will get worse before it gets better, but there's no reason to believe it's going to get meaningfully better anytime soon. The Commerce Department put that data out yesterday, and what it showed is that there's a real shortage. Demand is 20% higher than it was a couple of years ago. There's a huge mismatch in supply and demand. Prices are high. Prices are higher. So what has to happen is we need to make more chips. Unfortunately, there's no easy solution. The solution is increased domestic manufacturing of chips, which is what we need to do.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lyons with Matt Miller in New York and Tom McKenzie in London. Anna Edwards is off today. Well, Matt, Tom, of course, President Biden of the U.S. and the EU Commission President Ursula von der Leyen just wrapped up a press conference in which they announced an energy deal between the U.S. and the EU, announcing an agreement to boost the supply of LNG to Europe from the U.S. by the end of this year with at least 15 billion cubic meters. The aim, of course, is to wean Europe off of Russian natural gas. And under the agreement, EU member states will work to ensure demand for 50 billion cubic meters of U.S. LNG until at least the end of 2030. You are seeing the oil market moving off of this. The oil market has been moving quite a lot lately. We'll talk about that, inflation fears, how it influences where you want to be positioned in this market. Mark Hafley, UBS Global Wealth Management CIO, will be joining us next. This is Bloomberg.
almost the end of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping, but many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada
Udah 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame. Sekarang ya ada, 1-2 itu ada. Tapi nggak kayak dulu. Kalau dulu rame sekali. Sekarang paling dapat jualan ya 100, 120 gitu. 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 tuh nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu. Sama aja. Belum ada turis ke Bali. Masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance Early Edition, and here is what you need to know. The US has struck a deal to help Europe replace Russian gas imports. A senior European official says it will lead to additional imports of liquefied natural gas from the US. The issue is critical, as Russia is the EU's biggest natural gas supplier. US officials are worried that Russian President Vladimir Putin may lash out dangerously. Russian troops are bogged down in Ukraine, and some say Putin's tendency when boxed in is to escalate. Meanwhile, President Biden wants Russia booted out of the G20. And European Union officials suspect China may try to soften the impact of sanctions imposed on Russia. They say Beijing may be ready to supply semiconductors and other tech hardware to Moscow. China's potential influence on Russia was a central issue in talks at the NATO, EU, and G7 summits Thursday in Brussels. I'm Tom McKenzie in London. Matt Miller, Kayleigh Lyons in New York. Anna Edwards is off. And Matt, across Europe, it seems that markets are really trying and failing to get any grip on what is happening. The geopolitics, of course, the uncertainty there, and of course the action we've had from the Fed in the last few days. Matt?
Yeah, I mean, markets typically don't unlike certainty, and markets typically don't like rate hiking cycles. But in the U.S., we've seen an incredible recovery. The S&P 500, okay, futures are down a little bit right now. But keep in mind, at one point we were down 14% year to date. Now we're only off 5% year to date. We're up 1 or 2% for the week. So it hasn't been a bad run for equities amidst a war, inflation, a rate hiking cycle that could get pretty serious. The U.S. 10-year yield right now is off a little bit, but still at 235.21. So the highest level that we've seen since May of 2019. And NYMEX crude is still hovering around 110 a barrel. Texas Intermediate trading at 109.82. It's off 2.25%, but still relatively high levels. Speaking of high levels, Bitcoin right now over $44,000. Typically, it's a risk indicator. It's actually not moving that much, but I think just the stability and the level are really interesting for the digital currency. Kayleigh, what do you see in terms of the pre-market movers?
Well, you were talking about the decline we're seeing in oil. That is translating through to energy stocks and pre-market trading here in the U.S., one of them being Marathon Oil, which is moving lower by about 1.75%. As for some stocks that are moving higher in early hours, though, I wanted to point to Bed Bath & Beyond. Bloomberg reporting overnight that the company is close to reaching a deal with activist investor Ryan Cohen to add 3 directors to its board. Of course, Cohen had been pushing for a potential sale of its Bye Bye Baby business, or maybe a sale of the company at all, but it looks like it will just be the moves on the directors. That stock is up 1.6%. And then finally, I wanted to point out that pot stocks are doing incredibly well before the bell. You had a House panel yesterday saying it will consider a bill to decriminalize marijuana at the federal level. So you had both Sundial Growers and Tilray up more than 20% in yesterday's session, and those gains are continuing in early hours. Matt Miller sounds a little excited, Tom. Up 23% for Sundial, up 17% for Tilray.
All right, from the excitement of pot stocks to what is happening in Europe, which is much more bland and less interesting, frankly. You're seeing losses of about 0.2% across the benchmark stock 600. So European stocks set to underperform US equities as things stand for the week. Of course, you had that deal, as we mentioned in the headlines, between the Europeans and the US on the supply of LNG. It's a process that will take a lot of time, of course. The German Bunds have bid. They are down in terms of yields by about 3 basis points. Euro is up. That's largely down to dollar softness, up 0.1%. And of course, as we're talking about the energy complex, and just to remind, Brent crude down more than 2%, currently at 116 for Brent. We want to look as well at Russia if we have time, because it's the second day since the Russian markets opened. Pressure across the Russian space, and you're seeing losses of around 3.5%. There were gains yesterday. All the caveats, 33 stocks, no short selling, foreigners can't sell. Some of the biggest losers, VTB, but also Aeroflot, the last time I looked down, around 15%. The ruble, though, higher by about 3%. Sberbank and Gazprom, as you can see, under pressure. Gazprom, the big supplier of energy, down 10% on the back of that news around a US-EU energy deal. Matt?
All right, definitely a deal that we've been watching and will continue to report on. Right now, I want to get back to the markets. Mark Hayflett joins us, UBS Global Wealth Management CIO. And Mark, you know, it hasn't gone under the radar because we've been talking about the drawdown in global bonds, but I don't think people have gotten as alarmed about it as they would if you'd seen this kind of drawdown in global stocks. I mean, this is the worst quarter for global bonds on record in my lifetime, and I'm pretty old. So what does this mean for you? What does this mean for your clients?
Well, one of the things it means is that we're starting to see some people think about this inflation picture and this Fed hiking picture and incorporate it into their thinking. You know, I mean, the Fed basically is the market's kind of pricing in, and the Fed is saying its terminal rate is going to be 2.5%, and you know, and the 10-year jumped right up there. So I think that's one of the factors. But you know, also what this response in the equity markets kind of says, there's a lot of people out there, and I think this is something Bloomberg has mentioned, which is that there are no alternatives to equities in some ways because the bonds look toxic, and with the inflation, cash looks toxic.
Yeah, so Tina perhaps is still the name of the game, Mark. At what level does that change, though? What level of yield would make them start to look more attractive in the bond market relative to equities?
Well, you know, as you said at the top of this segment, there's a lot going on in the world, and I think really so much of it is out of control of you know, the markets and in the hands of politics. And I'll just give you one example. We think that the market right now in the short term is really going to be pricing off an understanding of if we have or when will we hit the peak sanctions and oil prices. And I think that, you know, that's a political decision because there's a survey out in Germany that 55% of the people in Germany would accept higher sanctions, even if it means supply disruption. So while you have that level of uncertainty, which, you know, could send Europe into a recession if we were to, you know, pull that supply of energy very quickly, it's hard to get a read on certain levels here before we get a little more on those kind of issues.
So with the uncertainty you speak of, Mark, how much should investors be adding to hedges here, and what should those hedges be?
Yeah, well, we still like commodities and energy-related equities here. I think, you know, think about commodities. It's not just about the supply disruptions around Ukraine. It's also there is a drought on pretty much every continent except Australia at the moment. And, you know, also as we come out of COVID, we do think that the demand for energy is going to remain strong and be strong through the second half of the year. And so even if we get some resolution in the tragic Ukrainian war, we still think that energy can be well supported into the second half of the year.
Mark, what do you do with tech at this point? There's been a bit of revival. We saw the positivity around NVIDIA yesterday stateside. Is there an opportunity in tech, or is it got further to run?
Well, look, I think that the belief in that all tech is great quality growth, that has that has come apart since last October. And so I think you have to be more selective, focused on, more growth at a reasonable price in tech. But we're also looking at, how we're kind of in a new era now where security is much more important. And so that would direct us to further into the theme of cybersecurity, which is an area we had done some work on before, but we're more confident in now.
You may have heard me giggle there because of an internal discussion about pot stocks here. But I wonder what you think about, this Vice stocks at a time like this typically are very defensive. Not saying that I'm not lumping pot in with, cigarettes and alcohol stocks, but that also brings up the interesting argument about the ever-changing nature of ESG investment. Mark, what do you think about that? How important is it to clients?
Well, look, it's very important, and it's actually a very active discussion that we have about what should count as ESG. And there are regulatory decisions about what qualifies in the ESG bucket, but we also have a client view about what qualifies as ESG. And so what we try to do is give clients kind of a X-ray through their portfolio and how their portfolio and different parts of their portfolio score according to the affinities that they have, whether they believe clean water is the most important, or women on the board of a company is the most important. We want to give people that as a choice so they can make that decision with their own portfolios and their own wallets.
Okay, Mark Hofeller, UBS Global Wealth Management CIO, on how to navigate ESG and, of course, the geopolitics of the moment. Some opportunities maybe still within the energy sector. Coming up, Anika Gupta, Wisdom Tree equity and commodity strategist. We're going to drill down then into some of those equity picks, at least on a sector level, with Anika, how to position. More advice there and insights. Stay with us. This is Bloomberg.
The United States, together with our international partners, we're going to work to ensure an additional 15 billion cubic meters of liquefied natural gas, LNG, for Europe this year.
We have a deal. President Biden speaking earlier in a news conference with EU Commission President Ursula von der Leyen after the U.S. struck that deal to help Europe replace Russian gas imports. Joining us now is Anika Gupta, Research Director at Wisdom Tree. Anika, 15 billion cubic meters by the end of this year. Can we just talk about whether or not that is a realistic goal, considering the infrastructure on the export side here in the U.S. and on the import side in Europe?
You're right, Kaylee. It's one of the most important topics of the day, and I think that's why the result of the summit so far has been the EU has failed to agree on stopping imports of Russian oil. That just points to the fact of how unrealistic this deal actually is. And the truth of the matter is, we have seen LNG exports from the U.S. Rise in an exponential pattern. And that is going to continue. But looking at the figures, 15 billion cubic meters by the end of this year, I think it's quite optimistic. So the EU is definitely, the US is doing everything it can to convince EU to cut off ties of Russian oils, of their dependence on Russian oil. It still looks to be quite a tricky position.
You know, Anika, lived in Germany for the past 6 years, and with Agatha Cantrill as my producer, would run into the former Energy Secretary, Dan Brouillette, all over the place, at the U.S. Embassy in Berlin, at the Defense Conference in Munich, and he was just banging his head against the wall, trying to convince the Germans to build more LNG, terminals, to accept more LNG from the U.S., and they didn't even really want to have the conversation with him. Is there any other choice?
We're regretting it now.
Yeah. I'm sure. Is there any other choice at this point for them if Russia cuts off the gas supply? Can they fire up the nuclear reactors that they shut down? Can they mine some more of that dirty brown coal that they have such ample supply of? What will they do?
To me, it really points to one direction, and that's demand destruction. Yes, you're right. We can definitely look at other alternatives such as renewable energy, coal, but obviously this coal definitely conflicts with EU being the champion, on the energy transition front. And given how vulnerable Europe is right now to its energy infrastructure in Russia, it's just accentuated the need of EU's energy transition plan. So the only alternative is demand destruction. We will have to see rationing of energy usage come into play in order to reduce that reliance, in order to reduce that dependence, until, as Kaylee mentioned, the necessary infrastructure is in place. And as you said, the previous decisions, the previous mistakes that we've made so far of not building out this infrastructure, it is going to hurt, and rationing will have to come into play.
So, Anika, that's the European side, the lack of infrastructure that is needed to absorb this LNG from the US. But on the US side, we've been hearing from executives saying, look, we just don't have the capacity, whether it's because we don't have the manpower or because we don't have the certainty when it comes to that policy around investing to actually get more LNG out of the ground. So you talk about an ambitious 15 billion cubic meters per year. Can the Americans even step up and provide that?
I think they definitely can. We've started to see, stockpiles at Cushing increase. We've started to see the rig numbers increase. They're now at the pre-COVID levels. So I would say, yes, the U.S. is definitely stepping up its production capacity. We might even see an increase in shale oil drilling, but obviously this is all going to take a bit more time compared to the EU just immediately snapping off imports from Russia.
Just before you let you go, Anika, just very quickly, your view on the gas price from here. It's been under a little bit of pressure on the back of this deal. Where do you see things going from here?
So gas prices have definitely risen very strongly on the back of the news that we've, on the back of these three main catalysts, the EU considering cutting off imports from Russian oil, Russia demanding payment in rubles from its unfriendly neighbors, and I think that area of uncertainty is going to continue to provide a tailwind for European gas prices.
Anika Gupta, great insights. Thank you for joining us this morning, Research Director at Wisdom Tree. Okay, later today, we're going to speak with the French ambassador to the US, Philippe Etienne, and the German ambassador to the US, Emily Haber. We'll get their insights, of course, on this deal and how the transatlantic relationship can maybe support a pushback further on Moscow and Russia. Stay with us. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. And the place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
A lot's happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller with Kaylee Lyons in New York and Tom McKenzie in London. Anna Edwards is off. Now, Daimler Trucks is currently suspending business in Russia, which includes its cooperation with Russian truck maker Kamaz. I spoke with the CEO, Martin Daum, earlier at Daimler Trucks' annual results conference.
I mean, the war had two impacts on our business. First of all, we immediately stopped all our activities in Russia, and we are going in the first quarter to write off our entire assets in Russia, which will be about a 200 million hit into our results in the first quarter. Secondly, we certainly are going to lose our business we had in Russia, Belarus, and the Ukraine, but this is less than 1% of our sales, so I would say we can compensate that in other regions of the world. Everything else, I would say we still see a strong demand for our products. We have an absolutely great product lineup, both in Europe and in the United States. I see here not so much such big impact at the moment into our business.
So demand remains strong. I wonder about moving your supply chain around. Is that work that you've got to do?
Our supply chain, fortunately, wasn't impacted too much by Ukraine and Russia. We basically have no impact on that side because we were fortunate not to have any suppliers in Ukraine, as some of our competitors had. And I'm sorry for that situation for them, but here we are the lucky ones this time.
In terms of innovation on the sustainability side, are we going to see fully electric trucks from Daimler?
Yeah, absolutely. We already have a pretty broad lineup, but we are continuing. We are launching in the United States our long e-Cascadia for a 300-mile range. We are going to launch that in pretty soon, first quarter, second quarter of this year, going into serious production, meaning really able to sell quite this truck in quantities. We are already very active on the school bus side in North America. We have 50% market share in the electric city buses in Germany. We are expanding our sales in Europe for that truck. With Mercedes ramps up, we bring out a specialized refuse truck on as a zero emission truck. As you see, I can continue go on forever. Right. It's a whole breadth of our product lineup going zero emission now and in the future.
Until when? I mean, when will there be no more internal combustion engines driving Daimler trucks?
It's a very difficult question. No more is a long. It will be a long way. I would say we see a significant ramp up in the second half of the decade. It depends. Goes from region to region. Look, we are market share leader in Saudi Arabia as well as in South America. There's certainly the US and Europe will lead the way. Other countries will follow. Inner city traffic will be first before we go to every single nook and cranny on the long distance one. I would say this is a long path until it's 100% zero electric. But the big ramp up will happen 4 or 5 years down the road. Always think it's not just our product lineup, it's the infrastructure as well. It's an enormous amount of energy we need along the road before the entire long distance is going zero emissions.
Let me finally ask you about autonomous functionality. You've already got a tremendous amount of safety technology in the trucks, but at what point will they be able to drive themselves?
I would say potentially sooner than we think. We are working both with Waymo and with our own subsidiary, Torque Robotics, on autonomous driving, especially in the United States. And stay tuned. I think we'll come up with more news in the second quarter of this year.
Daimler Truck CEO Martin Daum there. And important to point out, Tom, as well, that this is the first quarter they've operated as a fully separate business from Mercedes-Benz Group. The two split last year.
Yeah, and just a reminder again of the challenges that corporations face if they still have a footprint in that market. Talking of the Russian market, the equity market opened for the second day only since, of course, the start of this invasion of Ukraine. Under pressure, the IMOX, which is the benchmark over in Moscow, down close to 4%. The ruble is up, and on a individual corporate level, you're seeing particular pressure on Aeroflot, Gazprom, VTB Bank, and you had the National Settlement Depository over in Russia saying that they have had their account blocked with Clearstream. A reminder that Russia is still closing in potentially on a default. There's plenty more coming up. Bloomberg surveillance is ahead. We're going to hear from Michael Spence, General Atlantic Senior Advisor and Nobel Laureate, and the French ambassador to the US after the US and EU struck that deal on energy. The transatlantic alliance is stronger than ever, according to the US president and his counterpart in Brussels. Stay with us. This is Bloomberg.
If you do any kind of business in this country, there's a pretty good chance that you're going to see that business registered in Delaware. Why? Because that's where you do it. And our point was Wyoming can be that venue for blockchain enterprise, for crypto.
It's not the Wyoming way to sit around and wait for change. We want that independence, we want that freedom, we want that individuality. And that's a common theme that brings together bipartisan support for this in Wyoming.
We want to make sure that people understand, especially in Wyoming, but as the United States as a whole, this trend is coming. It's not going to stop. This is more of a small town that's growing into what I would call the cryptocurrency version of Silicon Valley.
It's the philosophy of that rugged individualism, the independence, and the ability to really get things done for yourself and control your own destiny. You get that from a blockchain, and you don't get that without it.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Remarkable is that the markets, at least risk assets, have really discounted, I think, the worst case scenario in the war.
I don't think we've seen the low for the year, so I think there's more pain to come.
The markets are just getting a lot more comfortable with the types of risks that are in the system.
The market is underestimating the impact of what's going on right now.
I don't know that investors are necessarily convinced that we're going to all of a sudden see kind of the sunrise tomorrow and it's going to be all clear.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
From New York City, for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance live on TV and radio alongside Tom Keene and Katie Lyons. I'm Jonathan Farrow. Futures unchanged on the S&P. TK, we start in Brussels. A deal between the EU and the US.
Well, there's no question it's a deal, and we move on to other things. What I find interesting, John, is the idea, will Russia exit the G20? To me, that really is a signal of the moment. There's lots of other side stories here. We're going to go to Maria. We're going to go to Anne-Marie. We're going to go to Aggie here. Is there in the trenches in Europe. And what I would say, John, is the number one thing to me is the data is beginning to come in. You mentioned before we went there that German data. That means something for Brussels.
As the president goes from Brussels to Poland, we'll follow that. We'll track the president through this morning. But Tom, you've nailed it. German business confidence collapsed. That's not my word. That's theirs. That's the EFO. Completely rolled over in a massive way, Tom.
What's going on in the zeitgeist on Friday into the weekend on that data? What the pros are watching, people like Javier Blas, is they're watching the middle distillates of oil, and that's going to be the kind of jump conditions like German confidence, John, where we get a measurement of where we are. Right now, we don't know where we are.
And this is not going to slow down, this Federal Reserve. Twos right now, 216, Katie Lyons on a US 2-year.
And a flatter curve. Once again, we're south of 20 basis points on 2s, 10s. The question now, John, is what exactly is the yield curve signaling, especially to a Federal Reserve that throughout the chorus of speakers we have heard all throughout this week, and we're going to get more today, they consistently are pushing that hawkish narrative, 50 basis points in May, perhaps again a month later.
You've seen the Goldman call. Tom, year end, they're looking for yield curve inversion. Year end, they have got the 2-year at 290 and the 10-year at 270. And they see that curve inversion the end of this year, the end of next year, and the end of the year after that. Now, Tom, can we have a few years of curve inversion without a recession?
Well, we haven't had it before, and the answer is no. You get a recession, and I defer to people along the way. Or what I would say is guessing the yield curve, John, is a complex study. Goldman Sachs certainly able to do that. The key thing there is not the inversion, it's the duration of lethargy that they're signaling.
Let's whip through the price action, Tom. Tons to get through this morning. Futures unchanged on the S&P. No drama here on the Nasdaq either. Yields come in a basis point on 10s at 236, 235.94 to be specific. The front end a lift again on 2-year yields at 216, up a couple of basis points. And crude heading south, 110.70. WTI, Kenny Line's down about 1.4%.
But still at $110 a barrel. We have to keep that context in mind, John. Of course, crude heading lower after that energy agreement was inked between the U.S. and the EU that President Biden announced in Brussels earlier. But in about 15 minutes or so, 6:55 a.m. Eastern time, he will be wheels up from Brussels heading to Poland. Part of this visit is humanitarian to see the ongoing relief efforts there when it comes to Ukrainian refugees, but also Poland and Russia, really a key relationship to focus on and how the Biden administration will play into that. Then on the data front, we talked about it, business confidence rolling over in Germany. We're going to get consumer confidence, the final read for March at 10 a.m. Eastern time from the University of Michigan. Remember, 59.7 was the prelim read, the weakest since 2011, and one-year inflation expectations of 5.4%, the highest since the 1980s. It'll be interesting to see how the ongoing war in Ukraine has altered some of the consumers' feeling here in the U.S. And then does that alter at all the Federal Reserve's thinking? Yes, more Fed speak on deck today. Waller, Williams, Daly, Barkin. We've heard from three of them already multiple times this week. Barkin of the Richmond Fed, though, will be giving a speech literally about containing inflation. Will he strike the same tone as we've heard from pretty much all of his peers this week, John? 50 basis points in May.
Kelly, thank you. Team coverage starts right now with Bloomberg's Anne-Marie in Warsaw, Maria Tadeo in Brussels, and Aggie Cantrell in Rzeszów, Poland. I want to start with you, AMH, and start with this deal between the EU and the US. Just how significant was this morning?
I mean, significant in the sense that you can see the U.S. really stepping up and trying to help Europe get these supplies of LNG to loosen their dependence on Russia. But we have to put some context to this. One, it is a planned deal. There's a task force involved. This isn't happening overnight. And two, it's 15 BCMs. That basically could potentially fill the hole of Russian LNG imports. That's liquefied natural gas. But when you look at all of natural gas that comes from Russia into Europe, it's 155 BCM. That is less than 10% of what they are trying to do. So it's a step, but it's a small step.
Maria Tadeo, what does Poland want from President Biden?
Well, a part of what they wanted, which was a clear commitment from NATO to protect this umbrella alliance over Poland, he already got. He got it yesterday, where Biden said the reality is Vladimir Putin invaded Ukraine thinking he was going to unleash chaos in Europe, but, quote, we're more united than we've ever been. And the Polish picked up on that line, saying it is true. We are going to see more troops on the ground. We are going to see bigger NATO deployments, and we are going to see operations that go and get extended over longer periods of time. The other thing, of course, today that the president of Poland, Mr. Duda, will really want to get from Biden is a clear commitment and a very clear signal that the United States will stand by Poland if Vladimir Putin gets close to the Polish border. Remember, this is a country that passes off the weapons into Ukraine. They have a huge land border with Ukraine. The other big issue that will feature highly is Belarus, because, Tom, look at the map. The geography for Poland is so complicated. Yep. They have Ukraine at war on one side, and on top of it, they have Belarus with a puppet dictator for Vladimir Putin, who is no longer neutral when it comes to nuclear weapons.
So when the European Union talks about the possibility of tightening sanctions, Maria, are we no longer just talking about Russia? How does Belarus factor into that?
Oh, Belarus has been sanctioned in many ways, and there's a real conversation about just cutting them immediately from the SWIFT. And Lukashenko, well, I would say the leader of Belarus, but in many ways, he is now a puppet dictator for Vladimir Putin, is also personally sanctioned by the EU. But the red line here is if we do see Belarus with Belarusian troops fighting this war in Ukraine, that is going to escalate. But Kaylee, the big question today in Brussels is, are we going to pay rubles for gas? And I ask this question to Mario Draghi just a few minutes ago. I asked him in English and Italian. There was no loss in translation. And he told me flat out, no, there's agreement in the European Union that this is a huge breach of contract, and it is up to Vladimir Putin to decide whether or not he wants to wreck his big oil company, Gazprom, a big gas company too, and unleash further chaos in the Russian economy.
The president today goes from Brussels, where Maria is right now, to Poland. 2 stops. Rzeszów is one, and then on to Warsaw, where Anne-Marie is. And I want to get to Rzeszów now with Aggie. Aggie, run us through this. The objective of today's meeting in Rzeszów and then on to Warsaw.
So the objectives in Rzeszów are essentially twofold. He's going to be having a meeting, a briefing on the humanitarian crisis that is not only affecting Ukraine now, but of course Poland, that has accepted 2 million of the 3.4 million refugees that have come over the border. It is experiencing a huge flow of refugees, and that is going to be a key focus of the meeting here in Rzeszów. And then he's going to be meeting with the 82nd Airborne, the security factor of this meeting, which is basically looking at the fact that not only is Poland bringing in more and more troops to this area around the border, but also they're getting a lot of support from NATO, and the 82nd Airborne is here to meet with Biden in order to discuss the security concerns for Poland.
From Rzeszów to Warsaw, then back home, and let's finish there, AMH. How is this playing out in Washington, D.C. at the moment?
Well, at the moment, Jonathan, there's been a sense of really rallying behind the president in terms of the tough sanctions. But what you would see on pushback from Republicans is that enough wasn't done soon enough. A lot of them said there should have been sanctions when their intelligence was that Russia was about to invade. But you do see, in a sense of wartime, their bipartisanship. Everyone on both sides of the aisle wants to talk tough on President Putin and wants to support the president in that regard. We should also note, though, Jonathan, that when you're dealing with a president that's now dealing with a war in Europe, the first time since World War II, a massive refugee crisis, there is also growing support in the polls for what the president is doing. I was really shocked that some of the polls, as this administration continues to face higher inflation, that 80% of people were willing to pay higher gasoline at the pump if it meant cutting off Russian oil and gas. The issue is, how long does that momentum last for this president?
Anne-Marie, thank you. Great work, as always, alongside Maria and Aggie as well. Tom, a busy morning for the president. The number one question most people have for Europe at the moment, can the continent avoid a recession this year and maybe next too?
Well, I think that's the economic story, John, and I think like it was yesterday, and surely yesterday, John, the headlines across the Bloomberg were A, historical, and B, I never imagined I'd see them, particularly on chemical weapons. I thought, John, you did a great job framing that up. But today is the same, except we staggered to the weekend. There's a real, to me, almost a Friday feel to this, John, except wars don't pause on Friday. It'll be interesting to see where the war is on Monday.
Couldn't agree more, the action on the ground, and how you reconcile that with some of the words we get about hope. Tom, I have to say that's changed this week in a big way. In the previous few weeks, Tom, we were talking about diplomatic breakthroughs, talks between Ukraine, Russia. I haven't heard anything like that, Tom, for days now.
Yeah, I mean, it's radically changed here, and, you know, we've got the troops following with the president as well. The president has to come home and resell this, and there was some very careful polling I've seen in the last 24 hours. Let's be clear, John, the American people, whatever their politics, in some want a more forceful response.
Unhappy about the way the administration has dealt with inflation, Tom. Things like gas prices, you see that in the polls repeatedly.
Right.
But I think there is support there for them to take a firmer stance. And the support in DC, TK, with the way that he's handled his relationship with allies as well. And I keep going back to that because I think it's a really important point. This wasn't about embarrassing your allies publicly. It was about allowing them to do it themselves, getting them to the moment they need to get to.
Right.
The Germans were never going to come out and say, look, we're cutting Russian gas tomorrow. This is about slowly unwinding the dependence. And Tom, whether we can achieve that in a short amount of time.
We'll have to see. The study for me this weekend, John, is on diesel oil worldwide in Singapore and around the war in Europe. Diesel oil, to me, that study is front and center.
Futures unchanged on the S&P, going nowhere. The Nasdaq negative 0.03%. We have a flat market and a week of gains in store on the S&P as well. From New York City on TV and radio, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. The US has struck a deal to help Europe replace Russia gas imports. That will lead to additional imports of liquefied natural gas from the US. The issue is critical because Russia is the EU's biggest natural gas supplier, accounting for more than 40% of its imports. NATO is responding to the war in Ukraine by boosting its deployments in the eastern portion of the defense alliance. It will increase the number of battle groups in the region from 4 to 8. At the same time, the U.S. said it was working with NATO to prepare for possible nuclear or chemical incidents by Russia. President Biden has called for Russia to be removed from the G20 group of major economies. The president spoke after meeting with allies in Brussels. A Russian diplomat says Vladimir Putin plans to attend the G20 summit in Indonesia later this year. The mystery is deepening over that crash of a China Eastern Airlines Boeing 737. At least one piece of the plane appears to have broken loose well before the impact. It was found about 6 miles away from the main wreckage area. That could indicate the plane suffered some kind of mid-air breakup. Bloomberg's learned that Apple is working on a subscription service for the iPhone and other hardware products. That's a move that could make owning devices similar to paying a monthly app fee. Using hardware subscriptions would be a major strategy shift for a company that has generally sold devices at full price outright. Amazon will face a tougher push to unionize its warehouses in the U.S. The AFL-CIO will help the Teamsters union in its attempt. It would be a rare level of coordination for two groups that have been estranged for nearly 2 decades. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Is this going to primarily be chips for your own business, or is this going to be more centered around the foundry business and external customers?
It's going to be both. And what we said today is we're announcing 2 fab modules. It's a large location, 1,000 acres, because I'd hope to build out a full 8 fabs or more on this location. And, you know, if we do that full project, it would be $100 billion over the course of the decade or so. So a massive project, initially 3,000 jobs, 7,000 construction workers, supply chain, et cetera. I mean, this is just fabulous. And the products will be our most leading edge chips. So as we said, this will be the angstrom era when we're going to 2 nanometers and below into the angstrom era. So it'll be the most advanced chips. potentially the largest manufacturing location in the world, will use its output for our internal products, but also for those of the foundry customers as well. So it's going to cover both.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
From New York City.
In London, in Sydney, in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
So recap the headlines.
You do not want to miss this story. How are you thinking about those dynamics?
Bloomberg Technology is live from the Shop Talk Conference in Las Vegas. Emily Chang sits down with Uber CEO Dara Khosrowshahi, DoorDash President Christopher Payne, and Savage by Fenty President Christiane Pendarvis, bringing you insight and analysis on the future of retail.
Are there customers that you think you've permanently won over?
Bloomberg Technology live, Tuesday at 5 p.m. in New York, 2 p.m. in San Francisco on Bloomberg Television.
The United States, together with our international partners, we're going to work to ensure an additional 15 billion cubic meters of liquefied natural gas, LNG, for Europe this year.
This will replace the LNG supply we currently receive from Russia.
President Biden alongside European Commission President Ursula von der Leyen earlier this morning. The president leaving Brussels a little bit later this hour and heading to Poland. Your equity market set up as follows ahead of all of that. Futures unchanged on the S&P, unchanged on the NASDAQ. Yields in a single basis point on 10s. 236.12 on a 10-year in America. Quickly looking at crude, 111, and let's call it 90. We're negative there, 0.4 of 1%. Tom, just getting a clearer picture of some of the devastation in Ukraine. This from last week, so some clarity on what happened last week in Mariupol. 300 people died in a March 16th Russian airstrike on a theater in Mariupol that was being used as a bomb shelter. That's according to officials in the Ukrainian city, Tom. That news just in 10 minutes ago.
The why of this, folks, for those not up on the map, is the goal to make a land bridge from Crimea down to the left up to Russia, and you want a strip of land along the way, bordered by the Black Sea, as we saw the Bednars Navy attack yesterday. And John, this is just about the price of a strip of land, and I'm not really sure how wide Russia wants a strip of land, but that's all they're arguing about is a land bridge, almost like they don't have in Kaliningrad.
And it's a conversation, Tom, about war crimes. An allegation that this administration has leveled against the Russian forces of deliberately targeting civilians.
We're going to move on, but for reading today, Therese Raphael on war crimes, a must read. I'll get that out on Twitter. She has an exquisite piece off her London desk. Right now, on What We Do on a Friday, we recalibrate into April, and we do it with someone who nailed the bull market of the last 24 months, Jonathan Golub, Chief U.S. Equity Strategist and Quantitative Research at Credit Suisse. John, I want you to help us with the nominal reality of high inflation, some kind of growth, but how the stock market does when there's higher nominal GDP. What happens?
Right. You know, Tom, when people see higher inflation, their assumption is that this hurts corporate profits because costs go up. And in reality, companies sell more in high nominal environment. What are we talking about? GDP is expected to be 3.5%. That's almost double the level that it's been at for the last 20 years. That's the consensus view right off of Bloomberg. And then inflation this year is expected to be high. And in those environments, stocks do well. But the key is certain stocks do much better than others. Energy, materials, financials, things of that nature do much better. Technology, which I love longer term, is not really a natural beneficiary of this high nominal growth environment.
So the narrative that's emerged in the last week or so, Jonathan, that you can't buy bonds right now because it's going to be worse for them than stocks. Stocks actually are your inflation hedge. Is that essentially what you subscribe to?
I do. Our call is actually that if you think about a corporate bond yield that at the end of the year will probably be roughly where we are now, but the mix within that corporate bond yield is going to shift. So the 10-year Treasury probably goes up, I don't know, 20, 30 basis points, and credit spreads come down because the system is going to feel less stressed as the year goes on. And so you may get the same bond yield in terms of the total, but how much of that comes from your Treasury, your inflation, your corporate spread, those things are going to be moving around a lot. They'll be keeping bond guys busy.
John, you put out a note last Monday. You said recession concerns legitimate but overstated. And on the Fed, you went through this piece by piece, the Fed, the yield curve. Let's start with the Fed. You said even if the Fed were to raise rates 7 times in 22, policy would still be too accommodative. Too accommodative for the market too?
Listen, the market probably always wants the Fed to do nothing and just to have lots of easy money. But the reality is that if inflation runs away from the Fed even more than it is now, we're all a lot worse off. I mean, if they raise rates, as they say they want to, 7 times this year, the Fed funds will average only about 1% over the course of this year. And yet nominal GDP is expected to be almost 9%. That just leaves the Fed actually adding liquidity to the market, not pulling it out. And I've heard I've heard Larry Summers talk about this, and Bill Dudley has talked about this, and Bullard's talked about this, that the level of kind of a neutral Fed funds rate that they're going to need to get to is much higher than right now the market is discounted.
John, very quickly here, are you suggesting sell Apple, sell Amazon, sell this, sell that?
No, I mean, listen, I'm neutral on those tech sectors. I think the key is that about 20% of the S&P is a really great inflation hedge. And that includes those cyclical sectors, even things like industrials and the like. However, the rest of the market doesn't do particularly poorly in this inflation environment. They just don't benefit as much. And tech is one of those areas that is kind of neutral in this environment. Tech does well. Frankly, if you think that we're going to slow down and recessionary risk is actually higher, for those people who are more bearish, they probably want to roll into tech because it tends to do a little bit better if the economy decelerates, which I don't think it will.
John, I've been crushed and destroyed because I've been in triple leveraged all cash while you've been going up, up, up with a bull market call. Again, from all of us, congratulations on a really wonderful 24 months of market. Speaking of crushed and destroyed, we need to bring you forward in reporting here now. On a number of days here, Portugal will take on North Macedonia.
Oh, here we go.
Because it didn't go. Let's go to the tape. We need to inform Kaylee on this. It's very important here. Let's look at the GDP. Let's look at the GDP here of Italy. I mean, the GDP of Italy is here's the coach here. We did our best. We knew that Italy could not stand the whole match. And the GDP of Italy is real simple. It's 1.9 trillion. And the GDP of Northern Macedonia is like Lake Placid and Tupper Lake, sort of the North Country combined. And the population is like the size of Phoenix. John, what happened?
Do you want me to talk?
I want you to talk.
Do you want me to reply? Would you like Jonathan Gollop to?
No, me to
Jonathan
talk,
Gollop
John.
around.
No,
Jonathan
John,
Gollop looks like he's
waiting.
been kicked into the closet this morning.
John, please, seriously, this is a huge defeat for Italy. Seriously, John, what happened?
Tom, what happened? Where do you want me to begin? We dominated possession. We dominated shots on goal. We dominated on pretty much everything except one single stat, and that's the only stat that matters. And Tom, when it comes to football, you're not entitled to a place at the World Cup. I think North Macedonia did fantastic just to defend the whole game. They had one great shot at the end, and that was the end of it. That was the end of it. Tom, I was deeply upset, of course, because the Italian national football team is a significant part of me, and for many Italians too, but good for North Macedonia, a great moment for them, and they go on to play Portugal and hopefully get a spot in the World Cup at the end of this year, Tom. Is that it? Can we not do this again for the next couple of hours?
We don't have to do this for the next 4 years, John.
I'll tell you something else in the next segment, all right? From New York, this is Bloomberg.
first step in building a connectome is to get your hands on some brains and then cut them up. It all sounds very grim, but Harvard turns out to be quite efficient with its brain harvesting. Jeff's lab can do a year's worth of research with a single mouse brain. Small chunks of the brain are fed into the slicer, where a diamond blade carves off a thin sliver of tissue. The tissue floats along some liquid and onto a piece of tape. The brain slices are then put into this very large machine, where they're photographed in the finest of detail. Software helps stitch the pictures back together into a single 3D image, and algorithms are applied to help make sense of what's going on inside of the brain.
Connection lost.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
When I was a kid and later on as a teenager in Italy lost the football, my mum used to call into school and give me the day off. That's a true story. And she messaged me last night after the game, Tom, and she said, and I can show you the message, do you want me to call Mike? I can if you want me to. Tom, it doesn't matter how old you get in life, you still feel the same way. Like a child responding to a sports result. Futures look like this on the S&P. Good morning to you. We're positive about 0.1% on the S&P. On the Nasdaq, up about 0.1% as well. Heading for a week of gains. Some big calls out there on both the equity market and the bond market. So let's talk about bonds first. 2s, 10s and 30s. The call from Goldman year-end now is the 2-year at 290 and the 10-year at 270. They're looking for curve inversion, 2s, 10s, not just the end of this year, next year too. What does that mean for risk assets? What does that tell you about the economy we're in at the moment with 2s, 10s right now, Tom, at about 20 basis points? Some significant flattening already year to date. And Goldman, with others, looking for some curve inversion by the end of this year.
Yeah, but the distinction here, John, is Goldman Sachs is going out further. There's a lot of people, Steve Major is one of them writing yesterday, who says, when does this get solved? And the answer is it gets solved later this year with this great uncertainty, or maybe early 2023.
So
others say no.
On 10, Steve Major goes to 2% the end of this year, and he comes back to 150, pushes that out for 2023. So it's quite a divide that's emerging from how we go from 22 to 23 and what that looks like in this bond market.
The timeline on the x-axis, let's get to it right now. Sarah Housewith is publishing moments ago for Wells Fargo. She's with us first, and we're thrilled by that this morning. Sarah, I'm going to make it real clear. You go to the heart of the weekend reading matter, which is how do you wring out inflation, recession or no recession? Let me start with the basics. Do we do it on the good side or the service side?
So it's going to take a more balanced mix of spending to wring out inflation without causing a recession. So we do see that there is a path where the Fed can bring down inflation without harming growth or the labor market, but it is admittedly narrow, especially when we look at how fast the Fed is looking at tightening, both in terms of magnitude, but also the sheer speed of it. The chance of overcorrecting is certainly elevated.
When you look at your glide paths back from nominal to inflation-adjusted GDP, where is your normal point? Is it this year, or will you wait for next year to get nominal GDP down to 4 or 5% and real GDP back to something American normal, say 3%?
So I think real GDP, we get that glide path, we get back there pretty soon here. So we think that we're actually set for a pretty sharp slowdown this year. So real GDP, just 2% year over year by Q4. So that's significantly below what the Fed is expecting. But the nominal GDP glide path, it's still going to look relatively elevated since we do have inflation remaining pretty strong through our forecast horizon. So from a nominal GDP basis, we're probably looking past our forecast horizon. Somewhere between 2024 looks more likely.
Sarah, can you give some detail on how you put this forecast together and how you account for what happens abroad? So if there is a recession in Europe, what would that mean for US growth? How do you factor that kind of thing in?
Well, so it certainly weakens the overall global demand for things like so it would reverberate back in putting some weight. But I think, ultimately the US is a very insulated economy. So of course there are global linkages, but the impact in what we're seeing overseas is somewhat limited. But as we see continued pressure on inflation coming from commodity prices, which would seemingly be a part of that European recession, that's still going to be a headwind for the US here as well.
When do you expect that to start reflecting more in consumer behavior and actual spending, considering we've seen confidence deteriorate, but on the consumption side, it hasn't yet?
Right. So we think that consumers can still continue spending at a pretty decent rate here in the near term. So there's still a lot of pent-up demand for services, which should help drive spending. And of course, household balance sheets and finances in general are still in great shape. So we think that really the slowdown comes more in the second part of this year as that inflation continues to bite and as we see real incomes continue to decline. So we've already seen them decline for 6 straight months. So that's led to the savings rate dipping below its pre-COVID rate. But we think that we really don't start to see more of that bite until later this year as you get the pain of these dynamics adding up more.
So talking of things not biting till later, what about Fed tightening? When do you expect that to actually start making a dent in reining in inflation? Can it?
Well, so I think immediately it's more of a signaling device. So it's leading to on-trend tighter financial conditions. And so I think we are beginning to see some of that effect. But I think in terms of when it really begins to put the thumb on demand, it is going to be, again, probably more towards the second half of this year. But I think as we see the Fed move closer to that neutral stance and you start to see that demand sapped, we can see inflation roll over sometime, Q2, maybe Q3 if you're looking more at core inflation.
What does the consumer do given this new inflation? I mean, it's decile specific, right? Some deciles spend, and other deciles do not, right?
Right. So you have basically the top 20% of households in terms of income account for about 60% of consumer spending. So that in part gives us the wherewithal to move past or to keep spending strong over the coming months as those households are doing relatively better off. But I think as we see these inflation dynamics continue, and particularly when you look at the components that are driving it. So of course it's been very energy driven. We're seeing the highest food inflation in 40 years. Housing costs have gone up considerably. That is putting that larger squeeze on your middle and lower income households.
Sarah, at the end of the day, I think particularly for market participants recalibrating at the end of the first quarter, it's about how corporations adjust. They're adjusting to a war and all the fuel and commodity dynamics there. They're adjusting to an end of a pandemic. We see deaths under 1,000 just in the last 24 hours. What do you guys model that corporations will do when you link your economics to your sell-side analysts?
So when we look at the overall corporate sector, so we still think that there's an excellent case for business investment. So we're already looking at a very tight labor market. And so that, of course, does support the need for new capital investment. So yes, we're seeing rates rise, but still historically low. So I think when we step back, the corporate sector overall is in still strong financial shape. And when we look at the case for capital investment, it still remains very strong. And so that's going to be a really supportive factor of growth, even as the consumer continues to get squeezed.
Sarah, you talk about how tight the labor market is. Jerome Powell has referred to it as tight to almost an unhealthy extent. What are the assumptions you are making about what the data is going to look like going forward, considering we thought we'd see some kind of normalization in the labor market about 6 months ago?
Right. So we've seen really remarkable growth in terms of jobs over the past couple of months, so remaining very steady and strong. I think a big part of that is this increase in the labor force. And so we continue to expect that the labor force will grow. We see workers funnel back, or other workers staying in the workforce longer. And that really has to do with the fact that these constraints around COVID, childcare are easing, but at the same time, of course, the financial incentive is increasing given the inflationary environment, given the relatively strong wage growth that we're seeing. And so I think a big part of our outlook is bringing those workers back. And so that's going to take some of the edge off of wage pressure and allow overall consumer income to still continue to grow, although it looks like against inflation, it's still not gonna quite keep up over the next few months.
Sarah House of Wells Fargo. Sarah, thank you. Good to catch up. As always, all the banks have made such big moves over the last 6 months. I think the outlook for the Fed has changed even in the last week. Ellen Zentner, Kaylee, of Morgan Stanley, now looking for a 50 basis point move in May and in June.
I missed that.
May and in June, back to back.
Yeah, joining the chorus, of course, it was Goldman that moved first on that following the Fed decision, looking for 50 and 50 back-to-back. And the thing about it, John, is that the Fed speakers this week don't seem to be pushing back on that idea. They're not pushing back on what we're hearing from economists on the street. They're not pushing back on market pricing. They are running with this.
That is the Morgan Stanley base case now, Tom. 50 basis points in May, in June, 25 basis point hikes penciled in for each meeting over the balance of the year, and QT to start in May.
You follow this more closely than I do, John. Can we state that 100 beeps in 2 meetings is an original idea for Morgan Stanley?
I don't think it's as original as it was, Tom. As Kelly indicated, Goldman getting on board with that kind of idea, Citi getting on board with that kind of idea. Most people see risk tilted towards.
You think Jerome Powell's on board with that kind of idea?
I haven't seen Chairman Powell push back. As Kelly indicated, Chairman Powell, if anything, inviting the idea of 50 in May.
I'd go to German confidence. You see U.S. confidence
Collapse,
drift
Tom.
like that. I have trouble seeing 100 beeps in 6 weeks if you see those kind of standard deviations.
Well, Tom, U.S. consumer confidence is already at a decade low. If you listen to what Governor Waller had to say to CNBC just the other week, he said that the data is screaming for a 50 basis point hike. The reason they didn't is because of the geopolitics. Where are the geopolitics? Where's Europe, for that matter, as well, Tom, in the next few months? And throw in Sarah House's take from Wells Fargo, who just said, yes, it could be damaging to Europe, but ultimately the U.S. economy is insulated.
Yeah, well, is it? I mean, I think that's something that President Biden is selling. It's not.
Crisis, when we came out of the debt crisis in Europe, do you remember decoupling? Can the U.S. decouple?
Yeah.
How long we talked about that for? And to some degree, of course it can.
Was that before or after V-shaped? I can't remember.
V-shape was a few years ago.
Okay.
Hey, let's face it, for the market, it was V-shape, wasn't it? In a big way. And for the inflation calls too. What are you drinking this morning?
Montaigne et chaud.
Okay.
Et chaud.
Spike Tang?
Still with a French accent.
Yeah, La Glace, silver plates.
Welcome back. 236.48 on 10s. Crude, just a break of 111. 111-ish.
Oh, you put it
down
in
by
your nose,
1.2%. What is it?
You put, when you say tang in French, you put it in your nose. Tong.
Okay.
Tong.
What else did you learn? Is that it?
We're at a
Went away for a
bibliothèque,
week.
and they sent me to the bibliothèque.
This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. U.S. officials are worried that Russian President Vladimir Putin may lash out dangerously. They say Putin's tendency when boxed in is to escalate rather than back down. Russian troops have found themselves bogged down in Ukraine, and Western sanctions have begun to take a bite. Speculation is that Putin might respond by using chemical or even nuclear battlefield weapons. European Union officials suspect China may try to soften the impact of sanctions imposed on Russia. They say Beijing may be ready to supply semiconductors and other tech hardware to Moscow. China's potential influence on Russia was a central issue in talks at the NATO, EU, and G7 summits Thursday in Brussels. In the UK, consumer confidence fell to its lowest level since November 2020. It is the fourth decline in a row for GfK's monthly index. Concerns about the rising cost of living and the war in Ukraine weighed on sentiment. The GfK index is closely followed by the Bank of England and the Treasury. Former President Trump has sued Hillary Clinton, the Democratic Party, and several others. He claims there was a vast conspiracy to malign his character and cast doubt on the legitimacy of his 2016 election win. The former president says he and his real estate company have racked up at least $24 million in legal expenses. A Clinton spokesman calls the suit nonsense. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
The Omicron variant and the latest wave have an impact on not only consumer trends, but your business. And do you expect the booster shots to make a difference?
Yeah, booster shot will make a huge difference. I think it's been accelerated by the huge leadership of the current Prime Minister Kishida. And I'm hopeful that our business will come back in Japan around perhaps mid-February to end of February, because we expect that a peak time will come around that time. And then the government will shift toward the reinvigoration of consumer. That will help us. And we had seen the huge comeback of the business in December when the things were toward the normalization. So I believe the business will come back, and I'm very much hopeful.
A lot's happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
the security environment in Europe is now changed and will stay changed, given what Mr. Putin has proven that he's willing to do. Before the war, there were 80,000 American troops in Europe on rotational or permanent orders. Now, there's more than 100,000. And we're not ruling out the possibility that we'll send more troops. Now, these are temporary deployments.
A brilliant interview yesterday with Anne-Marie Hordern and John Kirby, the Pentagon press secretary. Tom, live pictures coming in from Brussels. The President of the United States has boarded Air Force One. He will go from here, 1,250 kilometers away, to Cheshov, near the border with Ukraine in the southeast of Poland, Tom.
Kilometers on Friday morning American TV. I don't know. All I know is it's east. It's farther east than you think, and that's really the heart of these discussions, the G20, and also, seriously, John, NATO over to this war in Ukraine is Berlin, Warsaw, and Kyiv. They are farther east than we imagine. Air Force One, John, 76 passengers. There are 2 of them, actually. And, John, they're over 30 years old, and the president's sitting up front where you and I usually sit in seat 61B. Well, the answer is this is an important trip. My guess is he will sleep, and then it will be a working hour or so to Warsaw.
Should take about an hour and 20 minutes from here, Tom, once they take off. And the conversation, as you know, is about Ukrainian refugees. There are about 3 million of them, Tom, and the bulk of them, almost 2/3, I think now, have gone to Poland. So that's the conversation in Cheshov. From there, you go to Warsaw, Tom. And we've got to be thinking about foreign policy and keeping that country secure.
And the foreign policy there is a prime minister out of Kellogg Northwestern, among other academics, is really in touch with capitalism and maybe the Anglo-Saxon way is how you'd put it. And this is also a guy, of course, with a lot of polls in Illinois. There's a domestic constituency here that the president will be playing to in America. Right now, an update, and this is perfect. You have Dan Tannenbaum with us today, not when it's like specific sanctions, but just a general update where we are. He has been hugely helpful to us with Oliver Wyman and joins us this morning. Dan Tannenbaum, can there be more sanctions?
Thanks, Tom. There definitely can be more sanctions. I think the announcement from the U.S. of the additional round of sanctions were a little bit underwhelming to a number of folks. The U.S. announced sanctions on more members of the Russian Duma, additional Russian banks. They clarified that gold transactions are impermissible under these sanctions. But there's still more sanctions to go, more direct energy sanctions, more banks that can be subject to asset freezes, and secondary sanctions that could really begin to force countries like China and India to choose between continuing to purchase Russian products versus doing business with the U.S.
The big focus this weekend for me will be a study of not gasoline, but diesel. And I'm really interested, Dan, if we sanction refinery capacity, can we actually control what part of the refinery process we actually can do something about?
I think the sanctions that we're talking about with energy would begin to ban the purchase more broadly of Russian oil and LNG. We already saw the U.S. ban the importation of Russian oil a few weeks ago, preceded by Canada, then followed by the U.K. I think we're focused more on broader energy restrictions rather than the specific elements of the process. Now, that being said, sanctions have been imposed on companies that supply these refineries, so limiting their ability to operate while not outright banning the importation more broadly by third-party countries.
On the subject of energy, Dan, of course, Russia has now requested that hostile countries pay for gas in rubles. Given the sanctions that are currently in place, is that even something that is possible? I mean, how would that work, even if Europe is pushing back?
I think we've already heard from a number of European countries that they will not be paying for what energy they continue to purchase in rubles versus the fiat currency they've been using to date, either in dollars or euros. I think it's certainly possible, but I think it's unlikely that you're going to see the West begin to take up that mantle. So then you do have the next situation of trying to continue with energy purchases in a currency of choice where the seller is demanding payment in a currency that the buyer is not willing to send in.
And on the subject of that, let's talk about Russia's debt payments as well, because we saw yesterday Severstal, Russian company, wanted to pay, had the money to pay, Citi would not let that transaction go through because it needed clarity on whether or not it or the person who runs it was a sanctioned entity in the United States. Can you just run us through what the consequences are for some of these intermediaries like banks, correspondent banks, what it would be if they messed this up and how that's likely to influence transactions as this crisis is ongoing?
So, Kaylee, that is the struggle. So what we saw last week with the coupon repayments that were made after the anticipation of the Russian government default, there were licenses issued by OFAC to allow those payments to be made. So those clearing banks had the authorization to make payments, to accept payments related to those outstanding bonds. Now, in this instance, where you have companies that might not be explicitly covered through those general licenses, you do have a situation where you have banks' risk appetite that may not allow them to make those payments. Now, that is the question. When you begin to look at global institutions, the US, UK, and EU sanctions don't perfectly align. So there's a lot of interpretation that's left, at least at some point, trades outstanding in different market infrastructure providers because they weren't clear on whether they could actually settle. That is one of the bigger issues. If a bank clears one of these payments inadvertently, that can be constituted as a violation of law, which is subject to fines. Now, that being said, there is so much movement in this situation that I wouldn't expect fines to be on the horizon, but that is what happens when you make one of these payments that may be deemed impermissible and thus a violation of OFAC or other sanctions.
Dan, just quickly, how does this work internally at the bank? Some of these might be your clients. I just wonder how it works. When they've got a payment to make, they've got the money, it's been sent to them. Do they call the government? What do they do?
So there are discussions with the government. In some institutions, they've made certain risk appetite decisions where we will follow the letter of the law and nothing more. Some where we're looking to shy away from being in the middle of any of these transactions, legally permissible or otherwise. There's a lot of risk appetite discussions that are occurring with my clients right now to really understand what can we do and what do we want to do, which are not always the same criteria, and that is the discussion. And government deliberations are very much a part of this, whether with the UK government and HM Treasury and OFSI, or the US government and OFAC. Those discussions are ongoing when these type of situations are creeping up.
Dan Tannenbaum of Oliver Wyman, thank you, sir. Do you know, Tom, that how you do the phone sign distinguishes how old you are? Do you know the kids, they don't do this anymore?
I do pinky and thumb.
What do you do, pinky and thumb? That works too. I mean, that works. Don't do what I do. I mean, that's not right. That's the horns, isn't it? That's the phone. But Tom, do you know what the kids these days do? They do this. This is what they think the phone to the ear is. This. Does that make you feel old, Tom? What did you do? That?
We go like this.
Like this?
You know.
Did you do this when you...
No, I never did that, John, but we
that.
did have this, and we did have what were called party lines, where, you know, you could hear the lady next door screaming at the milkman.
Could you?
Oh, yes. This is, you know, just after the phonograph came in.
Of course.
John, a serious note.
Sure.
Finland announces they will stop the train from Helsinki to St. Petersburg because everyone in Finland that they know of has left. Russia.
Amazing, Tom. Amazing. The president heading to Poland from New York. This is Bloomberg.
estudio, en nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar. Y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes, según las modelizaciones nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes como tienen planteados el plan director urbanístico.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
What's been remarkable is that the markets, at least risk assets, have really discounted, I think, the worst case scenario in the war.
I don't think we've seen the low for the year, so I think there's more pain to come.
The markets are just getting a lot more comfortable with the types of risks that are in the system.
The market is underestimating the impact of what's going on right now.
I don't know that investors are necessarily convinced that we're going to all of a sudden see kind of the sunrise tomorrow and it's going to be all clear.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Live from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance on TV and radio alongside Tom Keene and Katie Lyons. I'm Jonathan Farrow. Futures up 0.2% on the S&P. Wheels up, TK, from Brussels to Poland. The president on the move.
Air Force One in flight right now, John, and what they're really talking about here is on the greater European front, the future of G20. Will Russia be involved? Yes, the war and such. But far more, the relationship of Poland with the United States of America. There's a deep, deep history here, John. This is an important meeting with the capitalistic juggernaut of Eastern Europe.
And from there, Tom, the broader diplomatic effort and China's role in that. President Xi had a call with Prime Minister Johnson earlier this morning, Tom. We're getting some comments from that, some headlines. A report out of China that Xi says the international community should promote peace talks on Ukraine and that China is willing to continue to play a, quote, Tom, constructive role.
The constructive role, my guess, starts with communication first. It'll be interesting to see how the United States and China communicate with each other. Maybe that's the job number one for Secretary of State Blinken moving into April.
This was part of the effort this week, Kaylee, to get the Chinese government to take a firmer stance, a stronger stance against the invasion conducted by the Russians.
It's something that the president continually pushes for. He, of course, had his own conversation with Xi Jinping a week ago today, John. The question is what role China really is going to play, how active a role, given its friendship with Moscow, but also wanting to avoid any repercussions on the part of the West with sanctions that are in play. What's interesting is you're hearing reporting now that Europe is growing increasingly concerned about China potentially providing semiconductors, other technology to Russia to start to fill the void there. And of course, China still buying Russian commodities.
The economy in Europe already getting hit. Business confidence, Tom, in Germany. We've touched on this a couple of times. According to the IFO survey, it collapsed. It collapsed, their word.
I'm glad you bring this up, John. What's important here going into the final week of March and to start out April, and we'll see it today with the Michigan statistics as well, the University of Michigan numbers. This economic data into a new month is maybe as critical as we've seen back to March of 2020.
Let's whip through the price action, Tom. Futures up 0.2 on the S&P, on the Nasdaq 100. Shaping up as follows, up 0.2% as well. Yields doing nothing at 236.85 on 10s, doing something on 2s. Yields have been sky high over the last few months, 216 relative to where we were. We closed out last month sub 150. This month, we've added some real weight to the front end of the curve, and as we've done that, this curve has got flatter. We'll discuss inversion, the prospects of that in just a moment. Crude 110.55, we're down about 1.6%, Kaylee, down almost $2 on the session.
Yeah, still around $110 a barrel, though, for a barrel of crude. Of course, while we were talking about things that are sky high, you can say the bond market, also the President of the United States, literally in the skies as we speak, somewhere in between Brussels and Poland, where he is set to land around 9:15 a.m. Eastern time. He will be greeted by Polish President Duda. The question is really about, A, the humanitarian crisis and the Ukrainian refugees in Poland, the ongoing relief efforts, but then also the issue of security. Poland shares a border with Ukraine. What are the concerns about potential spillover as we see war still raging? Then here in the U.S., you guys were talking about the German data. Let's talk about the U.S. data. University of Michigan consumer sentiment, the final read for March will be coming in. The preliminary read is hovering around the lowest level since 2011. Inflation expectations over the next year, the highest since the 80s. How does the war and the perception of it change how the consumer is feeling? And how does it change how the Federal Reserve is feeling? We basically have an idea of that after days and days of Fed speak. We're going to get more of it today. Waller, Williams, Daly, all speaking yet again, and Barkin of the Richmond Fed also will be giving a speech about how to rein in inflation. The drumbeat toward 50 basis points, John, it continues.
Kelly Lyons, thank you. We'll talk about that through this morning on TV and radio. Your team coverage starts right now. Bloomberg's Anne-Marie in Warsaw, Maria Tadeo in Brussels. AMH, the president, leaving Brussels and heading to Poland. Talk to me about the objectives for today.
Jonathan, today is really about seeing what is going on in terms of Poland as the epicenter of the humanitarian crisis due to Russia's invasion of Ukraine. We should just remind you of the numbers that the UNHCR have put out about what this war has caused in terms of displaced Ukrainians. 10 million people fleeing their homes, more than 3 million in the surrounding countries that border Ukraine, and the majority right here in Poland. And I've been on the ground just a few hours because we flew through the middle of the night, and just 10 blocks walking from my hotel to the position where I am now outside Poland's Science Institute. There are Ukrainian flags now outside of Polish institutions, street corners. You see Polish people selling Ukrainian flags, and the Ukrainian flag is just spray painted all over the city. There is a sense here that there is a show of solidarity and support for people that are fleeing this war.
Maria Tadeo, Ike, Dwight David Eisenhower, long ago and far away, talked about a domino theory, particularly of Asia and communism. The Prime Minister of Poland has talked to an allusion to the domino theory of Russia moving to Ukraine and then on to Poland. Is it legitimate? Can there be a domino theory in this war?
Well, Tom, it really depends who you ask. When you speak to Western Europeans, what they tell you is that ultimately these former Soviet countries have a huge trauma precisely because of the Soviet Union and precisely because of the way that Russia exerted its dominance over Eastern European countries for decades. So they argue in many ways they're oversensitive, they exaggerate. But when you speak to Eastern Europeans, they tell you, in fact, we told you an invasion was very likely and now it's happening. We've always warned you about Vladimir Putin and his idea of this greatness of Russia. And if you go back in the history of Russia, this is something that the country has repeated many times. So Russia has a special path in the world. It is not the West, but it is not Asia, and it has to pursue that path of greatness. A lot of this comes at the expense of neighbors. So the Polish will tell you if Ukraine falls, which they say it won't, but you know the war continues, and of course it's not clear how this is going to end. Vladimir Putin could be reinvigorated, and then target countries perhaps like Moldova, where there's of course already troops on the ground in the region of Destania. Lithuania. They could also become more aggressive when it comes to Poland. They could do that with the Baltics too. And if you watch Russian TV, Tom, on a daily basis, you know that these are theories that they get float, and they float on debates at primetime television in Russia where they say, what if we create a corridor to Kaliningrad that cuts through Lithuania? So all of this for them, there is a sense of psychosis in many ways in the Eastern European countries that the West doesn't take serious. But when you speak to the European countries, they tell you this war in Ukraine, it's almost existential for us.
Well, and Maria, speaking of a potentially reinvigorated Putin, and we're getting reporting now that there's an increasing fear within the Biden administration of Putin as a cornered animal, escalating rather than de-escalating. How is that informing foreign policy as we move forward?
At the moment, we haven't seen the U.S. change their nuclear posture, but the G7 statement yesterday made clear that they put Putin on warning for the use of chemical, biological, or nuclear weapons. John Kirby, the Pentagon press secretary, said to me yesterday, this is something that is concerning. They monitor it every single day, but they have yet to see a change that would make them think they should change their own nuclear posture. But there is a sense that President Vladimir Putin and the Kremlin, who thought this, their quote would call it a military operation, would be done in just days, that potentially now they would start to dig in. And we should just quickly remember that President Putin has provided air cover for Bashar al-Assad, his ally in Syria, when he used sarin gas on Syrian people. He's used deadly Novichok in Salisbury, United Kingdom in March of 2018. This is not out of the realm of possibilities for an individual who has already used these types of instruments or turned a blind eye to his allies using these types of deadly weapons.
MH, thank you. Maria, just a final question to you, something that's been on my mind. The former Chancellor Angela Merkel, have we heard anything from the former Chancellor? And to what degree has her legacy been tarnished by how this has played out over the last month?
And Jonathan, what can she say at this point? When you look at Nord Stream, well, it's been ditched, but this was her project. What can Angela Merkel say that would bring a debate here to show that Germany has taken the right policies over the past 10 years? What we see now is that Germany made a fundamental mistake in which it believed it could separate the trade from the politics and it could separate the security from defense. If you ask in German, should Angela Merkel say something at this point, many will tell you it's just best she stays quiet and takes a step back.
Maria, thank you. Maria Tadeo, out of Brussels. Anne-Marie Hordern in Poland today. The president wheels up. He goes from Brussels to Poland. Cheshire, first of all, on the border with Ukraine, and then over to Warsaw as well. Tom, for the Germans, I don't think you can overstate the change we've seen in a single month.
Oh, yeah.
On policy on several fronts from that country.
I think, John, this is something I've spent a lot of last couple of days talking to the younger crew about. This is seismic is the correct word. This is a seismic change into the headlines that we saw on the Bloomberg yesterday. Not only are these headlines stunning, but they're headlines that we never envisioned. I think I never envisioned that Germany would make this sea change. I didn't ask Maria there because of the delay, John, but you wonder what Mr. Schroeder's doing, as you mentioned, Nord Stream 2. He's sort of.
Did you see the reports, Tom, that he went for a meeting with Vladimir Putin without actually telling Chancellor Scholz? Did you see that report?
I missed that report.
It's amazing.
Away. I'm sorry.
We talked for so long, Tom, about the Schroeder reforms. Do you remember that? And how much Chancellor Merkel had benefited from them. His legacy tarnished.
Yeah.
This is the piece from Spiegel earlier in the last week, Tom. Merkel's legacy on Russia cast a shadow over her party. It's been a difficult moment for Germany, and they're standing up and making a big change under Chancellor Scholz.
And one thing we've seen in the last 24 hours is a new timeline on energy independence. I'm hesitant to use that word, where we shift from 2025 to 2024, but you still got to get there.
It's going to take time, Tom.
Yeah.
And a lot of effort. Futures up 0.2 on the S&P, on the Nasdaq up a similar amount. Yields coming in about a basis point. 235.94. Crude down 1.8%. 110.27. A lot to talk about in this bond market and what it means for equities. We'll do that with Binky Chandler of Deutsche Bank a little bit later. Then on to Jeff Yu of BNY Mellon. Fantastic market guest this morning for you. Heard on radio, seen on TV. This is Bloomberg.
Keeping you up to date with news from around the world. With the first word, I'm Ritika Gupta. The US has struck a deal to help Europe replace Russian gas imports that will lead To additional imports of liquefied natural gas from the U.S. The issue is critical because Russia is the EU's biggest natural gas supplier, accounting for more than 40% of its imports. NATO is responding to the war in Ukraine by boosting its deployments in the eastern portion of the defense alliance. It will increase the number of battle groups in the region from 4 to 8. At the same time, the U.S. said it was working with NATO to prepare for possible nuclear or chemical incidents by Russia. The economy in Russia is on course for a deep recession. According to a Bloomberg poll of 24 analysts, Russia's GDP will shrink 9.6% this year and 1.5% in 2023. Meanwhile, inflation is now forecast to average 20% this year. That would be the fastest rate in about 2 decades. And the mystery is deepening over that crash of a China Eastern Airlines Boeing 737. At least one piece of the plane appears to have broken loose well before the impact. It was found about 6 miles away from the main wreckage area. That could indicate the plane suffered some kind of mid-air breakup. And in Shanghai, the number of coronavirus cases soared more than 60% in a single day, hitting a record of more than 1,600. Authorities widened restrictions that have limited access to food and medical care. Scores of buildings and apartment blocks remain in lockdown. Bloomberg's learned that Apple is working on a subscription service for the iPhone and other hardware products. That's a move that could make owning devices similar to paying a monthly app fee. Using hardware subscriptions would be a major strategy shift for a company that has generally sold devices at full price outright. Global News 24 hours a day on air and on Bloomberg Quick Take. I'm Ritika Gupta. This is Bloomberg.
This chip shortage is going to last longer than many people believe, likely straight through this year. And I wonder what that means for prices. Will this get worse before it gets better?
I don't know that it will get worse before it gets better, but there's no reason to believe it's going to get meaningfully better anytime soon. The Commerce Department put that data out yesterday, and what it showed is that there's a real shortage. Demand is 20% higher than it was a couple of years ago. There's a huge mismatch in supply and demand. Prices are high. Prices are higher. So what has to happen is we need to make more chips. Unfortunately, there's no easy solution. The solution is increased domestic manufacturing of chips, which is what we need to do.
has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Tuesday, Bloomberg Technology is live from the Shop Talk conference in Las Vegas. Emily Chang sits down with Uber CEO Dara Khosrowshahi, DoorDash President Christopher Payne, and Savage by Fenty President Christiane Pendarvis, bringing you insight and analysis on the future of retail.
Are there customers that you think you've permanently won over?
Bloomberg Technology live, Tuesday at 5 p.m. in New York, 2 p.m. in San Francisco on Bloomberg Television.
This is a war. So we have to cope with the recession. We have to react to that. We have to mitigate the unavoidable. I wouldn't call it recession. I don't think we have a recession. I think we have a slowing down of the economy.
Mario Draghi, the Italian Prime Minister. Tom, have you missed that? Hearing Draghi talk about the economy like that?
I do. I think, isn't he getting high marks? Isn't he all John getting high marks?
Tom, I think for a lot of people, things are getting tough now.
Yeah.
They're facing down an electorate, facing higher prices, higher energy prices. Things are difficult across the whole of Europe. I'll whip through the price action quickly, Tom. Futures up a little more than 1/10% on the S&P, up 0.2 on the Nasdaq. No drama there. Yields coming in a couple of basis points on 10s. Let's call it 235. Crude, Tom, at about 110.
We'll have to see. And I think what's important here, we got to follow up with this, John. This just in off the wire. Draghi will not coach Italy moving forward.
Has Mancini quit yet? Are we done with that?
Draghi. No, John, we're not done as well.
My heart's already broken.
Right.
Why stick the dagger in? Just, you know.
I'm a Red Sox fan. Get over it. Okay, right now, Binkham Chadha joins us, Chief Global Strategist at Asset Allocation Head at Deutsche Bank, writing brilliant notes about the moment we're in. And he's aware in his decades of work that this moment is highly unusual. We're readjusting, Binky. We're recalibrating into the second quarter. And the certitude I hear is tech is not the place to be. For whatever reason, everybody's conclusion is technology's done. Is it done?
I would argue, you want to be basically neutral. I know that sounds a bit boring, but that's, where we've been for basically since June, July of 2020. And take the NASDAQ 100 and divide and look at it relative basically to the S&P 500. You'll see that basically trends up. Pandemic hit and we went good 20% above. And so for the last 20 months, we've basically gone sideways. So going sideways is a market perform. So I think, I don't see any important reason to change the call just yet. We look at relative valuations, tech versus the rest of the S&P 500. We think it should trade at sort of a 40% premium, was trading at a 60% premium, is now trading at a 50% premium. So I would argue sideways is the most likely way. Earnings are meant to grow faster, and so we get some derating over time.
What is the character of their revenue growth? I get in a boom, everything's up, everything flows to the top, et cetera. But what's the character of revenue growth that's way superior to everybody else?
Yeah, so, I think there's a couple of things to keep in mind. Number one, as you say, their revenue growth and their earnings growth over time has been much stronger. But I think one of the things that one should focus on is that over the last same 20 months that we are talking about, if you look at, mega cap growth and tech earnings, and you look at them relative to the rest of the S&P 500, they're going perfectly sideways. And that's simply because early in the pandemic, mega cap growth in tech held up very well. Their earnings on a relative basis held up very well. Since then, everybody else's earnings with the cyclical recovery have been rising. And so there has not really been, an earnings advantage. And the key question, which was, very, very evident basically in Q4 earnings earlier this year is, to what extent was it just a pandemic benefit, and to what extent is this just going to basically wane?
Becky, on the subject of earnings, we were talking with Jonathan Golub over at Credit Suisse earlier, and he said basically everybody gets the margin call wrong in thinking that higher commodity prices, some of these inflationary forces, will translate into narrower margins, that in fact, because the top line is improving, actually margins will move in tandem with higher commodity costs. How are you thinking about that dynamic?
Yeah, so as far as equities and, inflation, commodity prices, wage inflation are concerned, I would sort of separate out the earnings question from the multiples question. On the earnings question, I would basically argue that, and it is what history strongly suggests, including in the 1970s, that basically higher inflation, higher commodity prices are basically neutral for earnings. And what I mean by that is, as you just said, yes, input prices are rising, but output prices are rising too. And if you actually overlay output prices and input prices, you can't really tell the difference. And so that's just telling you that, on average, companies are able to pass things on. It's not true for every company. But on average, I would say higher inflation has generally basically been neutral because it's been passed on. I think that, the cyclical context, or where you are in the cyclical recovery, is going to matter a lot. Early in the recovery, you have a lot of operating leverage as growth comes back. And as the cycle progresses and growth slows down towards sort of trend rates, that operating leverage basically diminishes. So you get more vulnerable basically to margins. As far as the impact of inflation on the other aspect of equities, which is multiples, history is also very, very, very clear. They've historically been very negative for multiples, but I would argue, you look across asset classes, there's very little basically priced in for a change in the inflation regime or any kind of break from relative to history. So I'd say, equities are definitely expensive relative to inflation, but that's the case across all asset classes. So I would say, we do have this strong consensus on inflation, whether you're looking at the consensus economic forecasts or, what's priced into markets across asset classes, that, this is largely temporary and is going to come down. So I would say, market outlook hinges pretty critically on whether that happens or not.
Binky, that's pretty constructive, I've got to say, from you. Binky Chandler there of Deutsche Bank. Tom, there's a bank that on the Fed side of things, Matt Lazzetti making the call there on rates together with the team, and balance sheet reduction of close to $2 trillion from May, going out to the end of next year.
Well, the research calibrated that David Focus Landau's put together is one that's multiple opinion. I mean, what I love about Deutsche Bank, John, is they fight like cats and dogs inside, trying to get to a market view.
Well, isn't that what they all do?
The one in the pincers, I mean, Binky's got it easy. The one that's aged in this crisis is Cerevelos. I mean, the idea here, what is the dollar going to do? Focus Landau's up on his boxer screaming, they're going to have to do a coordinated devaluation. And Cerevelos is going, what if I say something about this? I'm toast.
Tom, is this the research commercial for Deutsche Bank? Would you like to do Morgan Stanley too?
Yeah, I mean, they're the two banks. Seriously, John, every house is different. And Steve Roach off of Morgan Stanley now and Deutsche Bank, they fight like